huge mistake to think this is the end of collective security. But Putin has done serious violence to the international world order, as well as to Ukraine. But those bonds that bring NATO together, the ties that bring the UN together, they're still there.
That was Karen Pierce, the UK ambassador to the United States, from New York City this morning. Good morning. Futures bouncing back on the S&P and on the Nasdaq too. On the Nasdaq 100, higher by 0.8%, just off the highs as well on the S&P 500, up 0.9%. Ugly close yesterday on the Nasdaq, down and down hard. Europe has a problem. That's not exactly breaking news. Euro dollar briefly at 105, now at 106.09, negative 0.33%. The latest from the Kremlin. Here are the headlines. Wow. Gas cut-offs to Poland and Bulgaria are not blackmail. They go on to say, we will cut off gas to other buyers who don't pay in rubles. And in the Kremlin's view, Tom, Russia remains a reliable energy supplier. Those headlines out just moments ago.
Really interesting to see, and of course the movable feast will continue to look at this through the morning. And again, the euro weakening and printing a 105 handle for a bit, 106.07 now. Weak euro. It is a perfect time after the Secretary of Defense's comments in Europe to speak to Tina Fordham, founder, geopolitical strategist at Fordham Global Foresight, but far, far more with a few decades of really legit experience, including public service to the United Kingdom. Tina, I want to go right to it. The first sentence of your note, you say there is a military shift towards Ukraine. How do you observe that?
Well, I think, first of all, I think the conflict is tipping toward Ukraine. There will be some setbacks for both sides. But for example, Ukraine now has more tanks than Russia does in the field. This is remarkable. Of course, it's a combination of tanks they've commandeered from Russia plus supplies that they've got. The information war, the momentum. But you just mentioned the meeting yesterday at the Ramstein Air Base. 40 countries have now come together in unity around one really important idea, and that is that Ukraine can't lose this conflict.
Tina, if that's really the case, can we view the cutting off of gas supplies to Bulgaria, to Poland, as basically an escalation because Vladimir Putin is getting more desperate if he is on a losing foot?
Well, he's going to raise our costs, right, for pushing back on his military objective. Remember, he got away with Georgia in 2008 and Crimea in 2014. He wasn't expecting this resistance, and so he's going to raise the costs for us. The problem is for Putin is that the combination of those 40 countries coming together with a much more accelerated response to the need to provide arms to Ukraine, plus this move this morning to cut off supplies to Bulgaria and Romania, two EU and NATO member states, if they don't pay in rubles, it's going to accelerate, in my view, European Union resolve to switch away from Russian gas supplies. Germany's been the laggard. They're starting to see the light, or rather respond to the pressure of their fellow member states.
So, Tina, as you advise companies on how to handle the potential sanctions, the prolonged nature of the conflict, what are you telling them with respect to how this is going to proceed, how they should hedge, how they should really position to try to get the most advantage ahead of what a lot of people are seeing as prolonged weakness in the euro region because of that shift that you're talking about that will elevate gas prices?
Yes, well, it's a pretty mixed bag, right? So one of the things is, how does it affect kind of classical political risk outcomes like elections? Now, we would have said that the combination of inflation, cost of living increases should have hurt an incumbent like Macron at the polls in France. We just had the result, second term and historic second term. So even in politics, the traditional correlations in the data are breaking down. On the sanctions level, we need to be thinking about a pretty long trajectory because so many of the most powerful sanctions that the West can levy against Russia are being held back, particularly in the event of an unconventional weapons attack. So that is the next thing on my watch list. I think everything is on the table for Putin. All taboos have been broken. if Russia does cut off gas supplies, of course, to Poland and Bulgaria, it's not a reliable energy supplier. And I think that its days of being the supplier of choice to Europe are coming to a close.
Tina, in the last 10 days, has there been a shift? And I mean this in a general way, not a specific allegation, but has there been a shift in the West's timidity to take on Mr. Putin because of fear of greater issues like the proverbial World War III? Has there been a shift?
Absolutely. We're coming up to, or we just, I suppose, reached 2 months since the invasion. That initial kind of reluctance to get involved. Remember, Biden said U.S. soldiers won't be fighting against. I think he would still say that. But what I think has changed, and we heard this in Defense Secretary Austin's remarks, it's going to be about degrading Russia's capacity to inflict this kind of damage against its neighbors. And that is a massive shift.
Tina Fordham of Fordham Global Foresight, thank you for being with us today. Was just chatting with Dan Tannenbaum, sanctions expert over at Oliver Wyman, and this is what he had to say. At this rate, Russia will begin to cut off energy access to the West while the EU still debates an energy sanctions package. Tom, that's the reality of the situation at the moment.
Well, he's the pro. I mean, that's all there is to it. And folks, this is about different layers, types of sanctions. And then, John, as you've talked about a lot, actually applying them. And there seems to be a massive reticence among selected countries, not about the talking of it, but the doing of it. And maybe that's this morning what shifts.
Well, Russia has got to make a move as well, haven't they, when it comes to gas supply? They refer to themselves as a reliable energy supplier. I think many people will have their doubts when it comes to that particular statement. But is Europe at this point, Lisa, beyond next year, a reliable energy buyer for the Russians? And I'd suggest, based on current circumstances, for good reason, I'd suggest they're probably not.
Well, Tina Fordham just came out flat and said what we're all thinking, which is they're not a reliable supplier of gas if this is what's going to happen with respect to Bulgaria and Poland. But your point is well taken, which is it's more understandable why Russia might take this step or be more willing to if Germany is talking about moving away from buying their gas. I mean, that basically is them saying, look, if you don't want us, we don't want you.
There's a mismatch here, isn't there? If you want to inflict pain on the Russian government, you have to implement these energy sanctions up front and take some pain yourself. Otherwise, what happens? We're just moving around the deck chairs, aren't we? They get the opportunity to reroute their energy supplies to somewhere else. At the same time, the Europeans look for energy elsewhere.
Well, to me, the interesting thing is Vladimir Putin seems to have a lot less to lose, right? If they're not considered a reliable energy source, does it matter if no one's going to buy their oil and gas in a couple of years? And as he sort of succumbs to that possible reality, how much more will he be willing to do in terms of weaponizing these supplies? And that, I think, is underscoring some of the fear right now.
TK, have you got a final word on this?
Yeah, get out the calendar. It's April, on its way to May. This is an October, a December conversation, John. This is a preview of the autumn months.
Well said, Tom.
I stole that from Maria. No, don't give me credit. I stole that from Maria Tateo.
She's taking a day off for her birthday, right?
She emailed me and said, Tom, you don't know what you're talking about. Say this.
Happy birthday, Maria. From New York City this morning, good morning. Futures bouncing back just 1% on the S&P and on the NASDAQ 100 too. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Growth does drive inflation when it's demand side led.
I think that's what we're seeing is Fed officials trying to find where that restrictive point is.
This very pessimistic sentiment environment does provide some support for the market here.
Companies are in a really good place. Balance sheets are strong.
There's still quite a bit of momentum in the U.S. economy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Here's your bounce back from an ugly session yesterday on the Nasdaq up 1%, on the S&P 500 TK up 0.9%.
It's really moving, and I tell you, it's the sum of a parts thing, John. It's massively correlated to the volatility you see in yield, to what we see in the foreign exchange market, and of course commodities with a trend higher, Brent crude 105. But the heart of the matter, John, is how do you get the crystal ball out? And we're learning that on these earnings calls, whether it's something boring like a can of soda pop or it's something serious like Google and all that they do, the mystery they do. Do we have any forward guidance? I think no.
If they offer some forward guidance, they certainly have a lot of uncertainty around it right now, and we all do too. If I can guarantee you the next move of the Fed, 50 basis points next week, maybe after that another 50 basis points to the ECB, I can't guarantee you anything.
I think you mentioned this in the last hour, John. I think we've moved on from the gaming of the Fed out one meeting, two meetings, to the complete mystery of the then what into the late summer and early autumn. And again, with big earnings tomorrow, maybe we get to right the ship with Amazon and that other company. But for the most part, it's just there's no forward guidance except Poland and Bulgaria are shocked this morning.
That other company being Apple tomorrow alongside Amazon and Facebook a little bit later after the close. Lisa, that's the news out of Europe. Euro briefly with a 105 handle, right now 106. And Poland and Bulgaria taking this on the chin today. Gas supplies from Russia cut off.
Basically, it seems like a new phase in the conflict and this escalation of Vladimir Putin. The question in my mind is how much will this eventually goose gas prices, and what kind of impact will the European slowdown have on the global economy? I mean, we saw that in some of the earnings results yesterday. We talk about Google. That was one of the soft spots, was European advertising. This has a global ramification that we're seeing come out in the earnings reports.
Texas Instruments as well, throw in China. And if you're the ECB and you're President Lagarde, you're at the center of that, aren't you? What on earth do you do this summer?
honestly? And what she does, how is that going to affect the euro? If you say that she raises rates, does that actually weaken the euro further because people then see a further slowdown in the European economy, John?
So, Tom, we've had this recent euro weakness, sterling weakness, yen weakness, the dollar index just on a march higher.
Yeah, and folks, full disclosure, it really helps to have a Bloomberg terminal here because, as I mentioned, John, you triangulate, and I triangulate about standard deviation moves. Sterling is there. It's blown through 2 standard deviations. Yen is not, and yen is perfectly placed at a 130 to be a weakening 2 standard deviations. And euro's almost there right now. So we're sort of getting to the there of it. I would say a week out, like 103, 104 DXY.
DXY right now, 102.58. Let's whip through this price action. The S&P up 0.8% on the Nasdaq 100, up by 0.75%, well off session highs now. Yesterday, which is brutal on the Nasdaq 100, down 3, pushing 4 percentage points lower on the session. On the month, down 12% on the Nasdaq 100. Lisa, on the year, down 20%.
Just amazing, especially given the fact that those losses continued after the bell, and we see them heading into the open this morning, particularly on Alphabet or Google, as everyone else says. Today, what we are watching is the European Union's Gas Coordination Group meeting. They're going to be talking about some sort of coordinated effort to deal with Russia, cutting off gas supplies to Poland and Bulgaria. I am curious to see how much noise there is made about the number of buyers who've already submitted payments to Russia in rubles. Those gas prices off the highs that we saw at the peak of the conflict, however, still heading upwards. At 10 a.m., we get U.S. March pending home sales. I'm interested to see how much they slow down. Is the Fed effectively curtailing some of the momentum with mortgage prices at the highest level going back to 2010? Yesterday, we saw prices climb at the fastest pace going back more than 2 decades. That might start coming down if the sales start slowing. And aftermarket, that earnings churn does continue. Meta, Facebook reporting earnings. There are 177 S&P companies reporting earnings this week. This is the fastest and busiest week for Q1 earnings, and honestly, it has been so mixed. That is what I am watching. Yes, the NASDAQ is down about 20%, but as Andrew Sliman said just moments ago on this show, he sees another 9% decline potentially in the S&P, led still by those tech stocks as people reassess the global macro backdrop.
Elisa, it was a phrase that came up repeatedly yesterday. Google's Ruth Porat said there's a lot of uncertainty in the macro environment. Mary Barra of GM, someone you'll catch up with a little bit later, Tom, saying we did this even in the face of a challenging macro environment. That's the theme of the moment.
Yeah, well, I think for Mary Barra, it could be a 2-hour conversation. We're going to dive into that, John. And, of course, we've got to touch on Mr. Musk and his follies as well. John, let's move on right now because this is hugely important, particularly given tech yesterday, tech today, tech tomorrow as well. Denise Chisholm is out of the Boston University Economics Combine, which means you have the privilege as Zvi Bodhi on corporate finance. This a few years ago, and that is a good and beautiful thing to have Zvi Bodhi corporate finance under your belt. She holds court at Fidelity Investments as Director of Quantitative Market Strategy. I love your note, Denise, and I want to go to Will Danoff and Contra Fund. If I go to the Bloomberg and look at a given fund with a 91R squared, I see that Will Danoff and Company have 43% in tech ex semiconductors. Do we over-own technology right now?
Well, I think, that's relative to an index. So obviously technology is a huge weight in the S&P 500 and even a bigger weight in the S&P 500 growth index, which is what you're talking about. But I do think technology is a bit in the crosshairs, and not for the reason that investors expect, which is there's going to be a problem with growth because interest rates are going to be higher and that's going to create a problem. But I think the bigger issue is now for the first time in a decade, technology is expensive on relative PE. This is really the first time since 2005, 2006, since we've been in that top quartile range. Really, it's the opposite of what actually happened in the pandemic. During the pandemic, what you saw was when technology outperformed, I think it was during a period of time in a quarter by about 30% outperforming an up S&P 500, the technology sector actually got cheaper because earnings growth on a relative basis was so strong versus the market. We are in the exact opposite position today. As opposed to being bottom quartile coming out of the pandemic, now we're top quartile in terms of being expensive, and the sector, despite the underperformance you've seen, actually got more expensive on a relative basis in the last quarter.
This is important, Denise, that you're saying that what's driving the weakness in tech is still the Fed rate hiking story, not necessarily macro weakness. Is that correct?
It's the relative valuation. It's the starting point that's a bigger problem. It's correlated to macro factors. I think that there's certainly times when you see macro factors get linked up to valuation, but if you look at them both together, what you'll see is that relative valuation is almost more of an impact in terms of relative performance than macro factors. So investors have to make less a macro call than they think and just look at the odds of outperformance from valuation.
So Denise, based on that look, how much more does big tech have to fall, just simply based on what's baked into the market with Fed rate hikes?
Look, I think in some ways it depends on earnings at the end of the day. And this could be a much more long-lived process. It doesn't have to go down by a lot, but it may not outperform for a sustained period of time. I think on the exact other side of the ledger is what's happening in value stocks. That's very extreme. So obviously value stocks are always cheaper than the market, but if you measure them in terms of how many standard deviations are they cheap versus the market, what you'll see is we're pinned in the 90th percentile. This is very rare for coming out of an economic recovery, 2 years into an economic recovery. And what you see, it's the counter opposite that you saw coming out of the great financial crisis when value did not lead. And it's very similar to the 2000s when value did lead. So again, that relative valuation disconnect may be more of a driver than what we're thinking, which might mean that value versus growth is a much more long-winded, long-lived trade, maybe a couple of years, versus some, I think, that think it might be a knee-jerk reaction in the market to rotate into value very quickly and then back into growth.
Denise, thank you. Great to catch up. Denise Chisholm there of Fidelity Investments on a tough month of April. We've talked a lot about the performance of the NASDAQ 100, the severe underperformance. The S&P is down 7.8% this month. Lisa, you've got to go back to March 2020 for a month that bad. It's been brutal.
Everyone's been talking about how earnings will save the market. Earnings were supposed to be incredibly good. There have been a lot of strong earnings. However, there have been enough nodes of weakness to undermine that sense that there is confidence in the momentum. And I think that that is what is most important to pay attention to this week and next week.
I'm surprised that actually we outperformed in Europe. The Stock 600 on the banks index is only down 4%. I'd expect it to be down maybe more than that based on what's been taking place in Europe. Speaking of the banks, Tom, we talked about this a little bit earlier on. The banks have been terrible. Let's be clear about that. The earnings have done little to really stabilize things. Year to date, JP Morgan's down 20% this year, Tom.
I think I've said this, but I'm going to formally say it now, John. When in doubt, cut costs. That's what I would look for into the summer.
You're expecting
plain as simple as
job
that.
cuts, Tom? What are you looking for?
I'm not smart enough to know if it's job cuts. I'll leave that to Michael Mayo and other people, Ken Leon, that gives us such help on bank earnings. But the uncertainty there is absolutely untenable for any financial organization, and you right-size expenses with a vengeance.
Well, this morning, a ton of uncertainty around Europe. If you're just tuning in, euro-dollar very briefly with a 105 handle, 5 days of euro weakness. Right now, euro-dollar 106. The Kremlin out a little bit earlier this morning, responding to the story that Bulgaria and Poland have had their Russian gas cut off by Russia. The Kremlin saying the gas cut-offs to Poland and Bulgaria are not blackmail. They refer to themselves, Tom, as a reliable energy supplier.
Yeah, the backdrop there is a 105.19 Brent crude. I mean, can you imagine this discussion, John, if we break out, 120-ish, 115, whatever the numbers you want to use. But in terms of the time continuum, John, I would digress over to the agony of Netflix a week or two ago and what we've heard from Zaslav and Warner Brothers Discovery. Everything, John, is getting sped up in terms of synergies, and I wonder if you're going to see that at the banks and, frankly, in many other sectors as well.
Synergies. You hate that word. You hate that word.
Passion.
Synergies. What does it really mean, TK?
Cut costs.
In a big way.
Thank you.
Dan Morris of BNP Paribas Asset Management joining us very shortly on TV and radio. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. It's a major escalation in the standoff between Russia and Europe over energy supplies and the war in Ukraine. Moscow will cut off the flow of natural gas to Poland and Bulgaria. It's making good on a threat to halt gas flows to countries that refuse the new demand to pay for the fuel in rubles. European gas prices rose more than 20%. China's President Xi Jinping is calling for an all-out effort to boost infrastructure construction. It's Beijing's latest attempt to rescue economic growth. But the strategy may prove less effective this time around because of lockdowns being used to get the coronavirus under control. The world's richest person can't afford too many days like Tuesday. Elon Musk's stake in Tesla plunged by more than $32 billion. Investors assessed his deal to buy Twitter and gave their verdict by sending shares of Tesla down 12%. Musk has pledged some of his Tesla stake to secure the Twitter deal. Norway is tops when it comes to normalizing life alongside the coronavirus, while Hong Kong and mainland China are among the worst. That's according to the Bloomberg COVID resilience ranking for April. Norway is followed by Ireland and the UAE for places where the pandemic is being handled the best. The U.S. fell 6 spots to number 23. The U.K. is down 2 spots to number 12, both due to the number of fatalities. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
I'm concerned about the repeated reports of violations of international humanitarian and human rights law and possible war crimes, and they require independent investigation for effective accountability.
That was Antonio Guterres there, the United Nations Secretary General from New York, with futures positive just about 0.7% higher on the S&P, on the Nasdaq up by 5 or 0.6%. This move's fading a little bit. I'll keep an eye on that for you after the ugly close yesterday on the Nasdaq 100. Looking at the euro, 105 briefly, 106 now, negative a third of 1%. This big conversation about Russia cutting off gas supplies to Poland and Bulgaria, and the Kremlin basically saying no rubles, no gas. We're reporting that 4 European gas buyers have made ruble payments to Russia, and a person close to Gazprom says 10 buyers have opened up ruble accounts. Tom, the next payments are due in May. Going to be very interesting to see what is happening here. I need to work out what's happening here to work out what's going to happen next.
I actually looked at euro ruble. There's 4 ways to look at ruble. There's a basket, dollar ruble, and euro ruble, and actually, it's remarkable the strength of ruble versus what's been a very weak euro. But John, to your reading of those headlines, what's a buyer? What do we know?
Is it a country, a company?
I don't know. What's
Tom,
a buyer?
I don't have the detail on this, and I'm trying to get it. I'm looking for it. A lot of it does not make sense to me.
Yeah, I think so. So for clarity, what do? We talked to Anne-Marie Horton, our Bloomberg Washington correspondent. Anne-Marie, just within all your work in London, what does Brussels do? How does Brussels respond to this specific news of Poland and Bulgaria?
Well, they're having a meeting today, and we heard from Ursula von der Leyen, the president of the European Commission. Well, yeah, I guess it's the first step. And she's calling it blackmail on what they're doing. What we basically see is Putin using energy as politics. Halima Croft once said Putin never lets a good crisis go to waste. And that is precisely what he is doing. And he is getting ahead of it. When you look at the Europeans talking about sanctions, coal they were able to do. Now there's murmurs about oil. But they remain relatively silent on natural gas. This was always going to be the most difficult. So Putin essentially is getting ahead of them. And he's making good on his threat that he's been making for weeks, which is if you're not going to pay for these supplies in rubles, we will start closing off the valves.
MH, I thought there was this conversation about this supposed mechanism that everybody had agreed on to keep everybody happy. What was that?
Well, there was a mechanism potentially being discussed about oil at first, and this was that if Russia was going to be selling oil to European countries and they wanted to start to put sanctions on it, maybe on the margins, maybe those funds would go into an escrow account. There is a mechanism potentially that some of these, we're hearing about 4 buyers, right, and 10 companies who have set up accounts, which would be that they would pay for it in their foreign currency, then Gazprom Bank would be the ones to change the transaction of those of the FX exchange, and then the Gazprom Bank would get the rubles. This potentially is what these companies or countries, we're not sure who these 4 European gas buyers are doing, but basically this caves into Putin's demand regardless, because at the end of the day, he's getting the rubles.
Well, Anne-Marie, that's where I wanted to go. How can Europe really comply in any way, even in the way that they were going to earlier through this complicated mechanism, given that he seems to be forcing their hand? Or does this sort of expedite any kind of ban on Russian oil and gas in the near term?
Well, already it's expediting it because Putin is making sure it's expedited, right? He's cutting off the taps for Poland and Bulgaria. And the big question looming over Europe, especially Germany this morning, is who is next and what are we going to do? Right now, time is on Europe's side in the sense that we're getting into the summer months. They don't need as much natural gas. It has been a very warm April, February. They have a lot of supplies right now, but Putin is essentially very much so getting ahead of what he knows is coming. These are critical months for Europe to build up their storage so they have enough gas when it is cold in October, November, December. This is going to be incredibly difficult, which means you're going to see what we already see, which is tons of LNG from the United States going to Europe and other friendly countries like Qatar.
Well, Anne-Marie, a lot of people are saying that the U.S. is sort of the swing producer at this point, particularly of natural gas, and you're seeing shipments to Europe climb to record highs. How much has the Biden administration supported that, given money toward that, spoken about how important that is to really support national security globally?
They've spoken about this quite a lot, about how the United States is now this huge player in the LNG market, and you're seeing these companies in America ink these long-term contracts for liquefied gas to Europe. The issue is the United States alone cannot fill this hole. Europe is enslaved to European natural gas, to Russian natural gas. Also, it is incredibly cheap. You have to send a tanker, liquefied natural gas, then go over to a terminal in Europe. That is much more expensive than just shipping it through a pipeline from Russia into Europe. So they're going to have to look for other places, and the administration's been working on this for months, which is basically Qatar, a huge player in liquefied natural gas. But they have long-term contracts with a lot of Asian supply buyers like Japan. Then you have friendly countries like Japan saying, okay, we're okay for a few months. We can forego some cargoes and send them over to Europe. And you're already seeing that happening, but this is going to happen at a much quicker pace now.
Anne-Marie, just quickly, policy in Washington. We understand from reports, a few reports actually, that Senate Majority Leader Chuck Schumer met with House Speaker Nancy Pelosi on doing something about gas prices. What's in the works?
Well, there's a few things the administration has already done, Jonathan, which is the ethanol play, the SPR play. Potentially, there's been talk on the Hill on a tax holiday for gas prices. The issue is, are they going to be able to get everyone on board? And politically, this is going to be difficult because this is going to come back to haunt them in November.
AMH, thank you. Anne-Marie, on the latest, just as this headline crosses from Germany, not impacted so far by the Russian gas supplies hold. Seemingly every country, one by one, Lisa, saying if they're affected or unaffected by it. Belgium, a little bit earlier this hour. Germany, the latest, reiterating that gas payments will be made in euros or dollars. That's the line from Germany this morning.
Tom really put it well. When companies have to come out and countries have to come out and say they're not affected, you know that things have gotten concerning. And that, I think, is where we're at. And the fact that they're sticking to their guns about only paying in dollars and euros, how much do they expose those buyers of gas that have actually paid in rubles? How much pressure is that to stop?
Tom, euro ruble, and you mentioned it. The ruble's the strongest against the euro going back to 2020.
Yeah.
TK, I know a lot of people would say that's not a market. It's not really a market. There's a lot of restrictions around it. But there's a move there to talk about.
Yeah, the move is euro. This is with the euro down through 106, a 1.0597. These are all movable parts, John. And I'm going to say, and with a Bloomberg terminal, we can say this and sell it. But I'm sorry, market litmus paper right now really, really matters in all these debates, including what we haven't mentioned this morning, which is the tangible challenges for China as well.
Germany saying it's following EU guidance on Russia gas payments, whatever that means. We'll look for more headlines from the Germans
I guess,
and the Europeans as well.
balloons.
You'd think, Tom, so why haven't they been cut off if Poland and Bulgaria
Maybe
have?
tomorrow. Who knows?
Futures
Stay tuned.
up 0.4. This move continues to fade on the NASDAQ, up now just 1/3 of 1%.
They're not cutting off the tang.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Monster moves in this equity market over the last 24 hours and month to date, year to date as well on the Nasdaq. Keep an eye on the Nasdaq 100 because this move is fading. We are negative yesterday by a big amount. Today, we're now unchanged. We were up by 1 full percentage point. Facebook after the close, Amazon and Apple tomorrow. The earnings from the likes of Microsoft doing nothing to help out this equity market this morning. The S&P was up a little more than 1%, now up just 1/3 of 1%. You know the stats on the month. We're down 12% on the Nasdaq 100, down 20% on the year. We'll look to the earnings a little bit later once more. Tom, just over the last couple of minutes, the story's starting to build and some breaking news from the New York Times.
Well, there is, and this goes back to Archegos, and I guess no one should be surprised, but it's going to be a huge deal, John, particularly for global Wall Street in New York City, over to Zurich and back to New York. This is Mr. Wang of Archegos, and he and a close lieutenant, this according to the New York Times, is in some form of arrest. John, to me, what is so important here is the guy's past. This is not somebody new to this. He has left a trail of debris over at least a decade. He met with Julian Robertson at Tiger, Peregrine Fund, all the rest of the storied hedge fund of 15 years ago, let's say. And then and I'm reading this just very quickly, a $44 million settlement to the SEC in 2012, banned from trading in Hong Kong in 2014 for a period. This is a guy who's used to these kind of allegations.
And Bramo, just slowly getting a picture, some details of the charges.
Yeah, right now we are finding that he was arrested overnight along with his former top lieutenant, as Tom was saying, and he's being charged with racketeering, conspiracy, securities fraud, and wire fraud. And then remember, this is back in March of 2021, where he reportedly lost $20 billion over the course of 10 days, just to give you a sense that really inflicted huge losses on Nomura and Credit Suisse and really raised some questions about the leverage in the system. So now we are seeing it is an illegal kind of spot right now.
We'll stay on top of this story. The latest reporting coming from the New York Times and elsewhere too. Lisa mentioned Credit Suisse. Let's sit on the banks just for a moment. The banks not getting enough attention for me. Big tech is because big tech is reporting, but the banks, look out for them. In the pre-market doing okay, firmer on the likes of JP Morgan by 0.5%, but on the year so far, we're looking at losses of 20% for some of these names. It has not been pretty. That's the story for the financials. Here's the story over in Europe. Euro dollar, just briefly, with a 105 handle, and there it is again, 105.91. And look at the difference between what is happening with Treasury yields at the front end, yields up, and what's happening with Germany. That's not happening because there is a conversation right now, Tom, about a European slowdown and absolute confusion as to what the ECB is going to do in the midst of that.
Their choice set is totally different than the Fed, and I'm sorry, as I've said, and I know I'm boring on this, It is about being totally data dependent. And I'm sorry, John, a key data dependency is your currency. Can you imagine this debate if DXY 103, 104? Can you imagine this with weaker euro 105, 104, 103? Jordan Rochester yesterday at Nomura was heated. You pop a 105, how quickly do you get to 1.00 weak euro?
We're not far away. Weaker euro, weaker sterling, weaker yen. It's been the story of the last month. Dollar index, DXY 102, pushing 103. That's happening right now. And Lisa, it used to be a goal. I'd say it's no longer an objective. It's a problem.
It is a problem, especially as you're dealing with all the inflation. I mean, honestly, and also the gas issues.
That's the cross-asset price action and a little bit of breaking news as well. Let's get you some movers this morning, some single names. We can do that with Kriti Gupta. Morning, Kriti.
Yeah, well, good morning, John. Let's talk about those gas issues that Lisa was just talking about. As you start to look at Russia perhaps halting some of those flows into Poland, into Bulgaria, and potentially the rest of Europe, you are seeing big moves in the natural gas futures, and that has a read-through into the U.S. stock market. EQT, the largest natural gas producer in the United States, rising up about 2% at a time when American natural gas is really in focus. Can they make the gap up from Ukraine, from the conflict going on in the Eastern Europe part of Eastern Europe? The other big story this morning is, of course, going to be those big tech earnings. Tom and John, you hinted at this, the idea the NASDAQ 100 futures aren't down, they are up. A massive rebound coming off of a near 3% drop in the S&P 500, even worse for the NASDAQ. Microsoft, for example, soaring here, 4%, coming off that Azure business, 46% growth for a second quarter. That's their massive cloud business. Alphabet, on the other hand, down a whopping 4.6% in the pre-market. This has everything to do with that European ad spend as well as the YouTube viewers losing some of that market to TikTok. I don't know anything about TikTok, Tom. Maybe you do. You'll have to educate me on that in the 9 o'clock hour on radio.
Lisa's like, you know, it's all day.
Lisa's on top of it, unlike the rest of us. Meta Platforms, though, is going to be the other name in the tech space that you want to watch after the bell. If ad spend is an issue for Alphabet, it's going to be an issue for Meta as well. How much of an issue, though, is going to be the question. Tesla and Texas Instruments, though, telling you two very different pictures. As we talk about ad spend, Twitter comes to mind. Twitter down this morning, which means Tesla is up. The inverse correlation there between those two stocks, something you want to watch. And lastly, Texas Instruments down, coming off those supply chain issues in China.
Yeah, Tesla 882, folks, is a big deal. I've got about 4 margin calls on my head for Mr. Musk, and I don't want to be inflammatory on this. Obviously, we're closer than we were 2 days ago, but the idea of 5-ish, 6-ish, even up to 7-ish, you know, it's out there somewhere for Mr. Musk if he's trying to figure out how to do this transaction. We're continuing to watch on Archegos the federal actions against Mr. Wang, and we'll have that for you through the next hour. Right now, and very importantly, Tom Tesouris joins us with Strategas, head of their fixed income research. I love, Tom, your basic idea of still hovering, which is guesstimating how long, how dense this inflation will be. How far out into 2022 do we hover?
Yeah, well, I think we probably hover around this 8.5% to 9% level until the May print, which comes in June. And then we begin to trickle down, and really that's because essentially the events in Eastern Europe have pushed peak inflation out by about another quarter. That was likely to more likely to have happened in January. Now that's more likely to happen in May or June. But beyond June, we should expect to see inflation begin to trickle lower towards about a 5 to 5.5%, which is roughly where wages are printing right now. And if the Fed were to do nothing, that's roughly where we believe we would begin to stall out, about a 5 to 5.5% by second half of the year.
Even so, Tom, and let's say the Fed doesn't even have to go as far as some people think, can yields go higher than you thought earlier in the year simply because of the weakness in the yen, the weakness in the euro, the fact that foreign buyers are going to have a harder time buying U.S. debt on a risk-adjusted, currency-adjusted basis?
Yeah, we do believe yields can go higher. We'll look at 10 years for a moment and say we're looking at about somewhere between a 3 to 3.25 as a peak in the 10-year. Now, that's about 50 basis points away from where we are today. Now, the problem is to get to 3 to 3.25, you got to have a lot of short activity. Short sellers come in, and that's unstable. And so what we've seen in the past is when you see 10s begin to peak out, you get rapid reversals lower. We've already had one of those. 10s hit about a 3% overnight in Japanese trading hours last week, and then they reversed rapidly lower. So we do believe we can see 10s push higher from these current levels, but we're getting close to that ceiling that we think is about 3 to 3 1/4.
Okay, so once you hit that ceiling, are you going to be big buyers of duration?
We would very much be. Right now we have a duration underweight in the funds that we manage at Strategas, and we've been talking to our clients about closing their own duration gaps. I wouldn't get overweight duration and become a long duration buyer unless we get above 3 1/4. You may recall that we peaked about 327 in, I believe, 2019, and we could get above that on oversold conditions. At that point, let's say 330 or above, I would definitely be a buyer of duration because I don't see the Fed funds rate peaking this cycle above 350. So that would be very close to where the Fed funds rate itself would be peaking.
Tom, dovetail this into Jason Trenner's wonderful blend of stock selection, equity enthusiasm, and the macro call. How do the two of you speak together?
Well, so what this boils down to is we have earnings growth beginning to stall and operating margin compression happening across many companies because of the inflation picture. And then because we have 10-year yields possibly another 50 basis points higher, you're looking at multiple contraction on the equity multiple. So put it all together, you're looking at a weaker equity market. And I would very easily argue, now this is the bond guy saying this, but I would very easily argue that we have another 5% downside on the S&P when you put those two factors together. And that's also consistent with about another 5% downside in the 10-year Treasury. So looking at it all, where we would be looking at equity weakness for the remainder of this year, just on these factors alone: higher inflation, lower earnings margins, and lower equity price multiple.
I get uncomfortable when the equity guys talk about bonds. I don't know what to think when the bond guys start talking about equities, Tom. It's good to catch up.
Well, we're always bearish on equities.
Tom Tedesouros of Strategas, I know. We've got one of them sitting with Tom and I.
I don't know who you're talking about.
Permanently. We live it every day, Monday to Friday, Bramo.
It's exciting, right? I mean, honestly, it's sort of edifying when people come on. They're like, look, this is normal. You're normal. That makes me feel good.
I'm a bond guy, but let me tell you about equities. I already know what you're going to say. I already know what you're going to say.
Going down, straight down.
If you're just tuning in, the latest reporting from the New York Times. Do you all remember Bill Huang? Of course you do. The owner of Archegos Capital Management, the $10 billion family office, which we still haven't agreed on how to pronounce. Here's the latest from the New York Times. Mr. Huang and his former top lieutenant, Patrick Halligan, were arrested at their homes and are expected to appear in a Manhattan federal court later today. The arrests were announced by Manhattan federal prosecutors. Here are the charges. Prosecutors said the men were charged with racketeering, conspiracy, securities fraud, and wire fraud in connection with a scheme to manipulate the prices of publicly traded stocks in order to boost returns. I'm reading the New York Times verbatim for you. They said the plan, which relied heavily on leverage, helped pump up the firm's portfolio from 1.5 billion to 35 billion, Tom, in a single year.
It is not correct to speculate on this, John, but what we can say with the implied leverage, the alleged leverage, that Party A didn't know what Party B was doing, did not know what Party C was doing, etc., and did he affect that they did not know what the other parties were doing? That would be one of the elements of these allegations.
The New York Times leading that reporting this morning. Futures, they fade on the NASDAQ. Briefly unchanged. Right now up about 0.2%. They were up much more than that earlier on. The S&P up 0.4. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Natural gas prices in Europe jumped more than 20% after Russia made good on a threat to turn energy into a weapon against Ukraine's allies. Moscow halted gas flows to Poland and Bulgaria, and it will keep the supplies turned off until the two countries agree to the Russian demand to pay for the fuel in rubles. The European Union called the move blackmail. In China, there are signs that authorities are starting to bring two major coronavirus outbreaks under control. Shanghai has hinted that lockdown measures may be eased as infections drop to a 3-week low in Beijing. The number of cases has stabilized. SpaceX has launched 4 astronauts to the International Space Station. It's the first NASA crew equally made up of men and women. It includes the first black woman made a long-term space flight. That's Jessica Watkins. They'll arrive at the space station 16 hours after launch. Spotify paid subscriber forecast for the current quarter fell just short of estimates. That's following a strong start to the year that overcame the streaming service's pullout from Russia and a boycott directed at podcast host Joe Rogan. Neil Young and other artists pulled their music from Spotify. They claim Rogan's show was spreading misinformation about the pandemic. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells. No one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
in tech and on a year-to-date basis, last 3 or 4 months, it's actually value factors that are outperforming. I look at the Bloomberg factors on a day-to-day basis, and there's that value dominance even in a sector like tech.
We put that in for 2 reasons, because we love Lizanne Saunders of Charles Schwab, and also for the promo. Thank you, Lizanne. Futures up 0.5% on the S&P. On the NASDAQ 100, we fade a whole lot from this morning, that's for sure. Up 1/3 of 1%. Big tech after the close, it's Facebook. Then on to tomorrow, it's Amazon and it's Apple as well. Right now, Boeing, with an almost $2 billion miss on revenue, that stock is down in the pre-market, Tom, by a little more than 3%.
Yeah, it's interesting you mentioned it, John. I looked at it yesterday, and the chart is like no man's land. Like there's no trend.
Not pretty this morning, that's for sure. I mean, take your pick for the excuses, Tom. War, inflation, all of the above.
Or maybe just, sitting on the runway at EWR.
Have you got some complaints you want to share?
Yeah, whatever. It never happens in an Airbus. Joining us right now, one of the smartest, the best and brightest of Bloomberg Intelligence here on this Tech Week. Anurag Rana joins us, and we can look back at Microsoft. Forget about that. Let's look forward. Is Meta, Amazon, or Apple, do you separate Facebook from the rest of these giants?
Yeah, I would say so. I mean, both the others have massive moats around their businesses with almost, I would say nobody out there that can compete directly with them. Meta is all about what is the flavor of the month, where do users go, whether they go on TikTok, Twitter, anywhere else. It's just a very different business model.
I did earlier my chart from the moment of the pandemic called Valentine's Day 2020 and how they've performed. Let's start with Apple. Why has Apple substantially outperformed Microsoft, Google, and Amazon over 2 years?
I'd say that because of the pandemic, there was a lot of game download, a lot of the services business got through. But the other thing is people have started to realize the importance of the install base, that the ecosystem that they have is so rich and valuable that even if you're not able to sell, let's say, iPhones in 1 year, it's going to come back the year after. It doesn't matter. They have an install base of about 800 million iPhones, about 1.8 million connected devices. That ecosystem drives a lot of other services. Longer term, advertising, media, all of those things really help margins also.
Anurag, have you been surprised by the pain, by frankly the ramifications of the shutdowns over in China that have been reflected in some of the earnings that we've gotten out of tech?
No, I've not been surprised, only because we have seen that happen already once. So it was not logical that you wouldn't expect it. And when Apple reports, I do expect a similar commentary from them about, not availability of parts for some of their products, which means the product sales get pushed down for another quarter or the quarter after that. Those things don't really bother me. The question you have to ask is, can somebody give up their iPhone or their Apple product for something else? And I don't think so. And that really, I think, is the most important part of the Apple story.
That's the product side of things. I want to talk about the cloud side of things. And we saw this from Google last night. They actually posted a bigger loss than people were expecting. And this sort of shocked me at a time when people talked about the cloud being supreme and Microsoft coming out with better than expected earnings on that front. What do you make of that? Is just the Azure AWS dominance getting so great that it's hard to break in?
No, I mean, Google is going to be the strongest number 3, and it will always be the case. Microsoft numbers were spectacular on cloud. I was a bit surprised. And in fact, they guided for even a stronger number. I mean, only a modest deceleration in the next quarter, which is, unbelievable, close to 50% growth again going into next quarter. This bodes really well for AWS that's going to report in a couple of days.
Well, I think we've got to go back to the basic Anurag question I always ask, because I think it's something I don't understand. I don't think the public understands. The size of the universe of these companies, Amazon is different than Microsoft, et cetera, and your timeline out to where that universe becomes full. We're out 2 or 3 years. Anurag Rana's out, what, a decade?
See, yes, exactly. I mean, the way I think about it is the moat for these businesses are getting stronger day by day. The old fallacy was, well, they are hitting 600 billion in market cap or $1 trillion in market cap. They can't go any bigger.
Okay.
And I think that's not going to happen anymore.
We talked to Denise Chisholm at Fidelity today, and I mentioned Will Danoff on ContraFund. Will Danoff's ContraFund has a 91 R-squared, which means it's a lot like the index, X semiconductors. 43% of his portfolio is technology, computers, the Anurag Rana world. What percent is that going to be in 5 or 6 years? 60%?
Well, if he's allowed to, yes, that would probably be the case. in a sense that if there are no other
because he's allowed to. At this moment right now, is Apple under-owned because lawyers are saying to people, you can't buy any more Apple?
It could be the case. It could very well be the case.
Apple's under-owned on an institutional basis.
It could be very well the case. Now, one of the things we just examined is Apple's buying back so much stock every year. I mean, over the last 5 years, they've reduced their share count by 23%.
It's like Intel.
23%.
Is that a good thing?
That's unreal.
It's a very good thing if you know, I mean, if you're buying it at a reasonable price. Imagine this. They are going to spend $80-90 billion buying back stock every year. I mean, it would take, I don't know, Twitter,
But are they this is critical, folks. Are they reducing Palmisano and IBM 15 years ago, where you opened up the annual report and the first page was, we're glorious, we're buying back all our stock. Is it an IBM equivalent?
No, it's very different. There was so much competition from IBM. There was so much, companies that can come and take their share. There's nobody that can take away your iPhone and give you something else in your hand. I mean, how much money would it cost to take your iPhone away?
Well, ask the kids. They grab it.
If it's the old one, they'll sound that one, Anurag, and then Tom has to go back out and buy a new one.
Got that right.
Anurag Rana, great to catch up. That stat from Bloomberg Intelligence. The share count of Apple, Tom, down more than 20% in 5 years.
Well,
and we've become desensitized to the buybacks from big tech.
Yes.
How many people talked about the $70 billion buyback from Ruth Porter and Alphabet yesterday?
Exactly, they haven't. And what's important here is the implied January 1st dividend or all-in use of cash. These are big numbers, John. They're 7-8% sometimes.
They're monster numbers. Facebook later, Amazon, Apple tomorrow. If you're just tuning in, bit of breaking news in the last 40 minutes or so. Archegos Capital Management founder Bill Hwang and his chief financial officer charged with federal criminal violations going back to the blow-up of that firm. Do you remember that? Archegos, how could you forget? Here are the charges. The authorities said Hwang used Archegos as an instrument of market manipulation and fraud. The alleged fraud is claimed to have artificially inflated the portfolio from $1.5 billion. I find these numbers amazing. Let me go through them. $1.5 billion to $35 billion in 1 year, Tom. They're the allegations.
Well, we'll have to see. And, John, to start the hour strong with Greg Farrell, you remember his book, Crash of the Titans on Merrill Lynch. Greg Farrell talks about greed, hubris, and the fall of Merrill Lynch. I mean, is he going to rewrite the next book here with the same title?
He is part of the legal enforcement team here at Bloomberg. He's going to be joining us very shortly, and Lisa will talk to him about how difficult maybe some of these allegations might be to prove.
Especially considering the fact that there's so many wide tentacles that this really reached. I mean, that $20 billion estimated of losses really torpedoed some of the earnings from Credit Suisse and Nomura. It was a huge story last year, really stemming from that March 2021 affair. You just wonder who else is going to be affected in some of these allegations.
Greg Farrell coming right up in the next hour from New York City this morning. Good morning for our audience worldwide. The pop fades, the bounce fades on the S&P. We're up 1/3 of 1%. On the NASDAQ 100, up just 1/10 of 1%. For our audience worldwide, heard on radio, seen on TV, this is Bloomberg Surveillance.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done, uses a small sample number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What's happening now is such a supply chain shock that you're having this inflation come through.
This is a commodity negative shock.
When I think we discuss this growth scare, it's really more a story for 2023.
The slowdown in growth is going to be very, very impactful, especially a country like China.
If we have a slowdown in China, it's definitely bad news for us.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. An interesting day has become a very busy day and an historic day for global Wall Street. We'll get to the weak euro in a moment. John, the United States District Court, the Southern District of New York, the United States of America, v. Sung Kook Wang and Patrick Halligan. Archegos is back.
Bill Wang and Archegos, they're facing some charges, Tom. Federal authorities said Wang used Archegos as, quote, an instrument of market manipulation and fraud. We need to break down the charges, Tom, and how difficult or easy they will be to prove.
We're thrilled that Greg Farrell's with us. We'll get to him here in a moment. John, when I look at this in the follow-on, one of the parts of the debris here to note is Credit Suisse today hit a new low under 7 Swiss francs per share, however they measure it over there. Credit Suisse still is damaged from this scandal.
They are, and they'll be watching this closely. Tom, at the epicenter of this, of course, a market story, leverage. That acquired leverage, was that illegal? Or is that perfectly legal? What were the disclosures? How did they obtain that leverage, Tom? That's going to be a factor in this that I'm pretty interested in.
Well, we're looking at the document right now. Rebecca Jarvis out with it at ABC, and everybody will wade through the document very quickly here. Lisa Abramowitz, your thoughts?
I think it'll be interesting to see exactly, to John's point, what they go after in terms of leverage, given the fact that at one point he had $1.5 billion of actual ownership and $35 billion of exposure. Also, how this factors into the banking sector, considering the fact that a lot of the losses were borne by a number of banks, including Credit Suisse, as you mentioned, and Nomura.
Those of you joining us on radio and TV, an eventful morning in Europe with Poland and Bulgaria cut off from the Russian gas. And John, moments ago, euro down to new weakness. Wow, a 1.0582. Every pip there, John, matters.
And just to frame the weakness of the last 10 years, we had a 103 handle late 2016, early 2017. Arguably, the ECB wanted it there back then. They don't want euro-dollar at 106. But, Tom, what can they do about it? Are they going to talk about hiking interest rates into the summer with inflation where it is? Sure, with inflation where it is. What about the trajectory for growth? That's the rock and the hard place this ECB's in going through this year.
The data right now very fluid, of course, in the middle of tech earnings. John, what do you see on the data screen quickly that matters?
This bounce isn't a convincing one.
No.
We had a really big move lower at the close yesterday on the NASDAQ 100. We all got up this morning, logged into the Bloomberg, saw a move on S&P and NASDAQ futures of about 1%, and now we're up by about a third. Some big earnings coming up tomorrow, Tom. Apple and Amazon on deck.
What we do at Bloomberg Surveillance is try to speak to people that are truly in-depth on a given topic. If you study German at Harvard, that prepares you to be arguably the top investigative reporter on Wall Street. Gregory Farrell has done this at the Financial Times and for well over a decade at Bloomberg. His crash of the Titans on Merrill Lynch, his story was definitive 10 years ago. Greg Farrell, are you surprised to see this legal action against the founders of Archegos?
Frankly, no. Clearly, given the events of last year, we were all, all over this. It was clear that something had gone very wrong. It was more of a case of, can the prosecutors figure out a way, or what would the charges actually be? Because it looked like Bill Wang had been able to exploit a couple of legal avenues that are now sort of exposed, or at least, the facts behind them are laid out in this morning's indictment.
Greg, can we go through the charges? The quote here from federal authorities, an instrument of market manipulation and fraud, that's what they used the company for. The other allegation, they artificially inflated the portfolio from 1.5 billion to 35 billion. I'm not the expert here, you are, Greg. Explain to our audience when acquired leverage is illegal and when it's legal.
Well, this goes to securities fraud and transparency with your counterparties and the people you're trading with. And it clearly was part of Bill Wang's game to not let his counterparties, the banks he was dealing with, in on what he was doing with every other bank. So he was able to amass significant stakes in many companies without the market placing itself knowing. So there's a securities fraud charge related to his fraud on the entire marketplace. And of the 11 charges he's facing, there's a second securities fraud charge related to the counterparties he was dealing with. The banks, as you mentioned, Credit Suisse is reading this very closely right now, and a number of other people who got burned in that meltdown last year.
So, Greg, when you talk about Credit Suisse and Nomura and others who are reading this very closely, what are they looking for? Are they looking for their own liability, or are they looking for an off-ramp, basically for a lawsuit or some other way to explain the losses?
It's more of the latter, that, here, now, and it still has to be proven these are just allegations, but, for the U.S. Attorney in Manhattan to bring these charges sort of justifies their position that they got burned. Not that they were bad or get fooled, but, this guy is, at least right now, has been made criminal charges that he filed against Bill Wang. This will be of some support in the legal efforts they make to, limit the damage, or maybe try to get some. Right. There's a forfeiture allegation at the end, a forfeiture order at the end, to get whatever they can back.
Greg, Mr. Wang has enjoyed some quality time in Newark Federal Court in 2012. To be direct, he's left a trail of debris, of legal debris in Hong Kong and in America. Does his track record matter in these allegations to a judge?
I'm not sure to a judge, but to a jury, if this guy's go to trial, the fact that this was laid out and clearly his misadventures with his fund 10 years ago, and how basically the SEC had shut him down. And so he was forced to run a family office. And then the description here in the indictment of how he used that family office to basically, deceive the marketplace and go well beyond what a family office should be and extend it into an actual investment powerhouse. That will be part of the court case against him.
Greg, can you put this charge into perspective with the U.S. Attorney's Office in the Southern District of New York in terms of how they view leverage, how they've been cracking down on securities fraud, on manipulation, on some of these issues, especially as they pertain to family offices? Is there a larger narrative or context to put these charges within?
I think there could be, given just the what's been going on with the markets for the last 10 years and the rush to pick up every nickel on the highway, people bending rules, and in this case, going through them. It's a sign that the U.S. Attorney's Office in Manhattan is taking this very seriously and willing to go into deeper waters. This is not an easy thing. They did it in a year. It's a very complex case, and I'm still reading through it. It's a 59-page indictment. But this is beyond insider trading. This is we've reported, and others, that there's an investigation out of the same office into block trading on Wall Street. So this makes sense that there's a group of people there, prosecutors, investigators, focused on, some deep, intricate, complex trading strategies that could be going beyond the limits of the law.
Greg, you're still reading through it. I understand that. But just on first blush, as you go through some of the big allegations here, can you explain to us how difficult it is to prove the case? Federal authorities, it's their job to make it sound like this one is pretty straightforward. As you know, it's not. How difficult would it be to prove this?
Well, I think in this case, you have the counterparties, a number of representatives of the banks who will confirm in court, provide witnesses to say, yes, we thought X, and in fact, it was Y. The problem with Bill Wang is that he doesn't have a lot of allies here. I do think complexity is a defendant's friend. If this goes to trial, then a good strategy will be to inundate the jurors with as much information, financial information, market moves in the middle of the day, in the middle of an hour, etc., to try to just make it complex enough so that one juror or two jurors out of the jury panel of 12 will have some doubts or not understand it. That's a legitimate strategy, complex white-collar crimes.
Greg, you are expert at the partition between criminal allegations and civil allegations. Is this action on 11 counts a symbol of how all these aggrieved parties are going to go after Mr. Wang in the coming months and years?
Yes, I'm pretty sure, because again, you've got the power of the U.S. Attorney's Office. It's going to be at least a year or more till this goes to trial, if it does. But they've now got something they can show that that they can say this guy's seeking to fraud us. So this is comfort, if you will, to Credit Suisse and some of the other banks that got burned badly last year.
Greg Farrell of Bloomberg, just fantastic work, and as we work through it, we look forward to catching up with you again soon. Tom, to Greg's point at the end there, you can see where the banks would like this to go. They want it to look like that they were manipulated as opposed to being clumsy and lazy.
Again, I'm going to go back to just a simple amateur take, as this guy's left a trail of debris, John, over a decade. I mean, and Greg Farrell's definitive on this with his work at Merrill about malfeasance, and it takes months and quarters and years to do this, but it's not like this guy's showing up for the first time in American court.
Well, to see these numbers, to put it this way, when they allege the fraud is claimed to have artificially inflated the portfolio from 1.5 billion to 35 billion in 1 year, Bremo, that doesn't pass the smell test, does it? And that gets your attention in a massive way.
Absolutely. I'm really curious to see this within two contexts, right? There's a civil aspect, Tom was touching on that, in terms of how Credit Suisse and Nomura and others can absolve their losses, but also on a broader sense, and John, you've been touching on this since this came out. Basically, what does this mean in terms of how they understand legal and illegal leverage? And not from the Wall Street perspective, but from the investor community. And that, I think, is relatively new.
The latest this morning, the Archegos founder hit with criminal charges this morning. Futures up 0.6% on the S&P, on the Nasdaq 100, up around about 0.5%. Facebook after the close, Amazon and Apple reporting earnings tomorrow.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Federal agents have arrested the former owner of Archegos Capital Management. The family office had collapsed last year after the market turned against its positions. Bill Wang's former CFO also was arrested. Now both have been charged with fraud. The Archegos collapse led to big losses for a number of major banks. Natural gas prices in Europe jumped more than 20% after Russia made good on a threat to turn energy into a weapon against Ukraine's allies. Moscow halted gas flows to Poland and Bulgaria, and it will keep the supplies turned off until the two countries agree to the Russian demand to pay the fuel in rubles. Russia supplies gas to 23 European countries. China's President Xi Jinping is calling for an all-out effort to boost infrastructure construction. It's Beijing's latest attempt to rescue economic growth. But the strategy may prove less effective this time around because of lockdowns being used to get the coronavirus under control. The world's richest person can't afford too many days like Tuesday. Elon Musk's stake in Tesla plunged by more than $32 billion. Investors assessed his deal to buy Twitter and gave their verdict by sending shares of Tesla down 12%. Musk has pledged some of his Tesla stake to secure the Twitter deal. And Boeing has taken a long-awaited step to help restart deliveries of the troubled 787 Dreamliner. The company filed a certification plan with U.S. authorities. Now, work on the 787 has largely been halted for more than a year because of small structural flaws. Meanwhile, Boeing reported it burned through more than $3.5 billion in the first quarter, worse than analysts expected. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
Live from New York City this morning. Good morning on TV and radio. Here's the price action for you on the S&P and the NASDAQ too. On the NASDAQ 100, positive just about 1/3 of 1%. On the S&P, up 1/2 of 1%. A yield higher by 3 basis points on a 10-year, 275. The German bond market does not participate. Euro dollar, 105. 105.83, negative 1/2 of 1%. Just look at these numbers coming out of Germany. The government cuts the 22 forecast to 2.2% from 3.6%. And here's the inflation glide path through the next 18 months or so. 6.1% for inflation in Germany in 22, 2.8% in 23.
How do you get there, John? You absolutely nailed what I noticed. I mean, the GDP is back to what we'll call German normal. Fine.
Inflation is not.
Inflation plunges 6.1, which is, I get it, politically, socially, it's really a challenge.
Yeah.
But then what's the number after that, John?
2.8 in 23. There you go. And all of this, of course, is dependent on what happens with the war in Ukraine and gas supplies from Russia. We're actually just hearing from Ursula von der Leyen, the EU chief, saying the following. The Russian gas cut was not a surprise. Poland and Bulgaria are now getting their gas from EU neighbours, and I wonder where that gas is coming from to EU neighbours, but we can work that out at another time. Our response will be immediate and coordinated. The Kremlin is using fossil fuels to try and blackmail us. That's the latest from the Europeans, Tom.
Incredible news day. I really want to emphasize to folks, we've barely talked about Meta, which I guess is this afternoon. And of course, we're continuing to follow what Greg Farrell's following. Thank you, Greg Farrell, for joining of Mr. Wang and federal indictments. John, it's 11 counts, right?
I haven't counted them, Tom. If you say that's the case,
I think it's the case. I'm trying. I don't have the document yet. I'm trying. My entourage is trying to get the document. You know, it's.
Well, when you get it, pass it over.
Right now, we will go to Stephen Gallo, head of European FX strategy, BMO Capital Markets, and this is well-timed to say the least, because Mr. Gallo knows when the big economic numbers data, they adjust, currency adjusts. Stephen, do you need to readjust your 12-month forecast on euro dollar?
I'm not going to give you a 12-month forecast at this stage. I think we're just going through this one day at a time, just like policymakers, just like investors globally. But going back to your point that you made about economic data moving currencies, I think probably more so than at any time in recent history. I mean, perhaps you have to go back to the 1990s, certainly the 1980s. We've never been poised in FX for monetary policy divergence to potentially cause volatility in the foreign exchange markets like it is about to do, like it could do over the remainder of 2022. So that is a key theme that is, I think, poised to drive FX markets, maybe already driving FX markets already. When we look at the dollar strength recently, I wouldn't say it's all due to expectations that the Fed is going to increase the speed of monetary tightening. I say that's part of the story, but you also have a pretty negative flows picture for the euro, balance of payments flows picture, both on the trade side and also on the foreign direct investment side, at least data we have through February, to the end of February. And then of course, you've got the geopolitical risk discount. So even though we haven't seen investors really piling into short euro dollar positions, the data don't suggest that they're overly short euro dollar. There's definitely an underlying flows fundamental, which is distinctly negative for the euro. And it looks like it's going to remain that way. It could get worse if the Fed moves as fast as it's telegraphing and the ECB is unable to move or moves very slowly.
Stephen, what's the more important driver right now, the Fed, which you just went through, or the situation in China?
The more The most important driver for what? Eurodollar, or the most important driver for markets?
For the single currency.
I think over the last couple of since the end of last week, I think the more important move in FX has been in the RMB, the degree to which that has moved the Asian currency complex. Effectively, the RMB caught up with weakness that had been occurring in other Asian currencies beforehand. But the way that the euro has traded subsequently to that move in the RMB, now you see the RMB has been parked for the near term by PBOC. The way that the RMB has moved since the way that the euro has moved since the RMB has been parked suggests that there's very limited, if any, reserve demand for euros. And if that's true, that's telling on a number of different fronts.
Stephen, great to catch up, buddy. Stephen Gallo of BMO Capital Markets on an almost unforecastable euro-dollar, it seems, over the next 12 months. And I'm sure, Lisa, that will resonate with a lot of people.
Especially right now, as you see the euro breaking down its near session lows versus the dollar weakness, I should say, Tom. But just to bring you some of these headlines, I've just been looking at these, and honestly, it's fascinating to hear some of the comments out of Ursula von der Leyen, including one that seems to throw a little bit of shade at Germany, saying that it's a stark reminder to work with reliable partners, basically indicating that Russia is not reliable. But ruble payment is a breach of sanctions. So the focus goes back to those 4 payers who are paying in rubles and those 10 companies that have set up accounts. How much can that continue?
Well, there is a mechanism here to pay in euros that gets converted to rubles. And when Gazprom says that they're receiving the payments in rubles, I wonder, Lisa, what that actually means from the European side. Do they characterize it and frame it as they're sending the payments in euros and they ultimately get converted at Gazprom to rubles? I'm sure there's a mechanism here that they've all agreed on that works. And that's what the big question is for me this morning: what happened with Bulgaria and Poland? What were others able to do that those 2 countries were not able to do?
Or is this an issue of Poland and Bulgaria being more vocal against Russia and Russia trying to punish them? Interesting to note that Poland and Bulgaria are getting gas from EU neighbors. You mentioned this before, John. Well, I wonder where they're going to be getting the gas, the EU neighbors, right? How long can this continue before they have to take a harder stance and they're forced into some sort of ban of Russian energy? And frankly, at this point, how much is that going to be the immediate action that the European Union takes?
I actually think this line is embarrassing from Ursula von der Leyen. We've been working since March to reduce Russia dependency. That work is paying off now. Since March, Tom, when they've been warned repeatedly over the last 2 decades to do a whole lot more than they have done.
That's the navel gazing looking back. I think everybody's got to look forward fast, John. And to me, and I've just been studying this as a total hack, but the storage capacity in Europe, to me, seems to be the critical feature into the summer months, using it along the way, of course. But where does that sit in October or November of this year? And I don't have any expertise there.
I'm with you, but you call it navel gazing. You have to learn from the lessons. Otherwise, going forward,
that's simple.
What they've done repeatedly in Germany is look like they're going to do something, Georgia, Crimea, then time passes, and then they snap back to normal. I mean, you'll remember going into this crisis that the German business lobby, the Italian business lobby, wanted to go and meet with the Russian president, even with the troop build-up on the border.
Yeah.
That's the situation in Europe, even recently.
It's almost the end of the year, but Bali is still quiet and empty.
I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Live from New York City this morning. Good morning on TV and radio. Here's the price action for you on the S&P, on the NASDAQ. The NASDAQ 100 up just 0.2% after being lower, much lower in yesterday's session. On the S&P up 0.4%. Yields higher by 3 basis points to 275. We've gone through the charges against Bill Hwang of Archegos over the last hour or so. There will be a news conference at 11:30 Eastern Time, Tom, at the U.S. Attorney's Office for the Southern District of New York. That's going to take place at 11:30 Eastern Time.
Amateurs like me, John, and others like Greg Farrell, real pros, are going to go through 50-some pages of this document. I've got the document in front of me. Thank you, Shonali Bassick, for that. But, John, buried in this document, there will be a few sentences that are telling. Maybe we'll hear about them in the press conference.
Which one have you picked out, Tom? Because the other one that everybody keeps bringing up, and it's just a massive number, to take the portfolio from 1.5 billion to 35 billion in 1 year is it's pretty phenomenal.
Yeah, on a nominal derivative basis, that's bad, but it's not a shock to me. It's not like the headline thing to me. What I want to know is the paper trail they must have of the deceit along the way that they allege. And that, to me, is more interesting of how they manipulated. Let's say there's 20 parties, John. How did they manipulate the 20 parties that got hung out to dry?
And as Bill Hwang built up this leverage, Tom, going to be interested to see the evidence that he presents on what the banks either knew or didn't know.
Well, we'll go through the document again, a moving target, and as Mr. Farrell said with his expertise, look for a trial a year out or more. It's never a trial to speak to Edward Yardeni. He's president of Yardeni Research and has enjoyed corrections in bear markets such as we in now. I know, Ed, it's not 73, 74, but what is it? What is the character of this downdraft?
Well, I think the key characteristic here is this stagflationary environment that we've inadvertently walked into. I mean, we've had 2 years of helicopter money, and that was the easy way to deal with the crisis of the pandemic. But now we're paying the price for it with higher inflation. So I think that's the big difference. You know, the stock market can't have a tapering tantrum here and expect that the Fed's going to respond, because inflation is much more severe than the past three tapering tantrums.
Ed Yardeni, how will corporations adjust? We're going to speak to Mari Bari here in a bit of General Motors, and whether it's something as staid as autos, something as sexy as Facebook and the rest of it, how do corporations adapt given these economic events?
Well, look, I know there's a lot of concern here that the risks of a recession have increased, and they certainly have increased. In my mind, they've come up from 15% before the war in Ukraine to 30%. But one of the reasons that I'm not convinced yet that we're going to fall into recession here is the consumer sector is in very good shape. And to your question, the corporate sector is in phenomenally good shape. You know, they raised over $2 trillion in the corporate bond market, the non-financial corporations have. And they refinanced a tremendous amount of their debt at record low interest rates. So as the Fed's raising interest rates here, there's still plenty of liquidity left over from the past 2 years of helicopter money.
So you said that there's about a 30% chance of recession. It's gone up since the start of the war. In the U.S. and this year, or is that through next year? What's your time frame here?
Well, I think, you know, if you ask me about Europe, it's more like 50, 60% the way it's going, especially with this latest calamity.
For this year?
For this year, yes. For the 30%, I think it's more next year than this year. The leading indicators are still at an all-time record high, telling us that there's no immediate risk of a recession, though the stock market's certainly acting like it.
Well, do you agree with Bill Dudley and some others that if this ongoing momentum continues, that it will result in a more severe shock later on, a more severe crash later on, simply because inflation won't get contained and it will become more entrenched?
Not really. I mean, if you look at the history of inflation, it doesn't just keep going up and up and up. It's very spiky. Even in 73 and 79, we saw these spikes in inflation, and then they moderated. You know, the arithmetic of year-over-year percent changes is that when they are increasing at a very rapid rate compared to the past, at some point the arithmetic starts to slow them down. And I think we are going to see some moderation here in consumer durable goods inflation, which has really been the heart of the inflation problem. I think we're satisfying a tremendous amount of pent-up demand. Services have been relatively moderate. The problem is, within the services area, the rent inflation for the next 2 years is going to be going higher. So I think we're looking at higher for longer inflation.
Ed, a completely unfair question, but I want to synthesize the original Yale University study of fiscal economics, which, folks, was literally a franchise of New Haven for decades. We've got the mother of all fiscal stimuluses, and then we bring it over to the monetary side, almost Milton Friedman-like, to an inflation study. What is your perspective of the duration of excess inflation given the fiscal impulse we've lived?
Well, my forecast is higher for longer inflation, but that doesn't mean it's not going to come down. It's just going to mean that I seriously doubt we're going to see 2% inflation anytime soon again, not in the next 12 to 24 months. But will it come down to 3 to 4% next year using the consumption deflator? I think so.
Is that doable? I don't mean to interrupt, but this is critical at Yardeni. This is Olivier Blanchard and Adam Posen. Can this nation, can our viewers and listeners survive a sustained 3.5% inflation?
I think we may very well learn to live with it. We've learned to live with COVID. I think we're going to learn to live with 3 to 4% inflation. But it's not necessarily something that's going to persist forever. I mean, that's sort of my outlook for next year. And for the financial markets, the stock market and the bond market, just seeing a peak in inflation, let's say by the middle of the year, early summer, would be very helpful.
As we talk about these big macro developments and this idea of the Fed hiking rates, I do go back to this case against Bill Wang of Archegos and this idea of leverage in the system. And this is unique, and obviously he's being accused by the U.S. Attorney's Office in the Southern District of New York of criminal acts. But it does raise a question about what else is out there with respect to leverage, with respect to our visibility. How are you viewing that in terms of what we can expect in the upcoming months?
Well, you know, as we all know, the Federal Reserve has so far increased the Fed funds rate by 25 basis points, and we're in a range of 25 to 50 basis points. And yet the markets are already discounting that there's something's going to break here when the Fed really starts to move more aggressively. And everybody expects that in the early May meeting that the Fed's going to go and go ahead with a 50 basis point increase. And the market's got this jitters like something is going to break. And I see like $3 trillion of excess liquidity left over from the past 2 years of helicopter money. But the markets have their own agenda.
Well,
they don't, to me.
To take that a step further, Ed, do you think that the safeguards in place to avoid something catastrophic or some sort of systemic meltdown stemming from leverage really are secure enough to prevent that kind of action, that perhaps people are taking the wrong lesson from previous times because this system is much safer? Is that your interpretation?
Well, at the risk of being dead wrong, that is my interpretation, that the system is more robust. The banks are in great shape. Corporations are in great shape. Consumers are sitting at a tremendous amount of M2, and most of it is in demand deposits. Look, not everybody's well off and doing well. I mean, clearly, inflation is eroding everybody's purchasing power. But in terms of something breaking in the credit system, I just don't see it. I'm watching the junk bond yield to see whether that's going to signal some real serious problems. And so far, it's pretty calm.
Ed, we're going back to Arthur Burns' inflation move, rate moves, 50 beeps. Some people talk 75 beeps as well. Did that work out the last time?
Well, the Burns environment, of course, is what we go to look at the Fed raising interest rates too little, too late. And then eventually Volcker came in the late 1970s and just let it rip, let interest rates go up to levels that cause a recession. I mean, we do know that recessions always bring inflation down. But whether we can achieve a soft landing is the big controversy here. I suspect that we either do or we get a real short and moderate recession. Again, because I think the system is relatively robust.
Ed Yardeni of Yardeni Research. Ed, thank you. There was a really spicy note from Deutsche Bank in the last 24 hours, led by David Folkers-Landau. I got home yesterday and just read through the whole piece. Yeah. And Lisa, this idea that they really believe hard landing's the base case now for them, and they think this Fed's got to get the Fed funds rate potentially into a range of 5 to 6%. Let's be clear. That is not the base case on Wall Street right now.
Correct. However, what would that do to an economy? Their idea that basically inflation is so hot that that's what they need to do to curtail it. 5 to 6%. Bill Dudley might agree with this. It's an outlier call, but that not only is a recession the base case, but a severe recession resulting from that type of tightening in policy.
I'd love to catch up with Binky Chatter over at Deutsche Bank and get his equity market call off the back of that kind of model. Futures are just about positive on the NASDAQ, up 0.25%, a little bit more so than that. On the S&P, up 0.4%. It's been an ugly 24 hours for the NASDAQ, a terrible month, a really difficult year. On the month, we're down 12%. On the NASDAQ 100, we're down 20%. Coming up shortly, Bob Doll of Crossmark. He was bearish. I wonder where he stands now with this price adjustment. And a little bit later, Tom, looking forward to this in a couple of minutes' time, you're catching up with Mary Barra of GM.
Hugely timely. I really can't say enough about this interview. It's about the onslaught of electric vehicles and what it may mean for the single provider, or perceive that, Mr. Musk.
And the chip situation, Tom. Healing? Getting better?
It's
perhaps
there.
much more so in the second half?
All my research is no. I don't, no.
Anyone trying to buy a car right now? Bramo knows all about how difficult it is to get the car and how expensive it's becoming to buy one, or has become more recently.
Not just expensive, but difficult. You put it well, considering the fact that there's been an issue with supply chains.
Bramo drives us all around because Lisa's the only one on the show that drives.
That's about right.
Futures up 0.4 on the S&P, on the NASDAQ up 0.25%. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The European Union calls it blackmail. Gas prices on the continent surged more than 20% after Russia stopped natural gas flows to Poland and Bulgaria. Moscow made good on a threat to cut off buyers if they didn't pay in rubles. Bloomberg's learned that some European companies have already paid rubles for gas. In China, there are signs that authorities are starting to bring 2 major coronavirus outbreaks under control. Shanghai has hinted that lockdown measures may be eased as infections drop to a 3-week low. In Beijing, the numbers of cases has stabilized. SpaceX has launched 4 astronauts to the International Space Station. It's the first NASA crew equally made up of men and women. It includes the first black woman making a long-term space flight, Jessica Watkins. They'll arrive at the space station 16 hours after launch. T-Mobile reported first quarter profits that beat estimates. The second largest wireless carrier in the U.S. also raised its subscriber growth forecast. It's the strongest signal yet that T-Mobile is capitalizing on its lead in 5G. And shares of Deutsche Bank are falling. Germany's largest lender signaled that cost reductions targeted for this year are being eaten up partly by wage inflation. That overshadowed revenue gains across all of Deutsche Bank's operating divisions. And Boeing has taken a long-awaited step to help restart deliveries of the troubled 787 Dreamliner. The company filed a certification plan with U.S. authorities. Now, work on the 787 has been largely halted for more than a year because of small structural flaws. Meanwhile, Boeing reported it's burned through more than $3.5 billion in the first quarter, worse than analysts expected. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think the odds of a really deep recession, you know, some people are raising the shades of Paul Volcker and the deep recession we had then. I think that's very, very unlikely, extremely unlikely.
The former Vice Chairman, Alan Blinder, really interesting to hear his comments here, of course, always out of Princeton University. Let's get right to it. Lisa Brownson and Tom Keene with an important conversation on her automobile company, General Motors, but Mary Barra and much more this morning, the Chief Executive Officer of GM. Mary, you came out of General Motors Institute when we were kids in the Midwest. That was the cool school. And then you got the job in the Midwest, folks, a co-op job at GM. You've been doing this a long time. I want you to talk now about the manufacturing quality of Barra's General Motors going back to 1937 and that classic movie on GM tolerances versus what we see from, for example, Tesla. How are GM cars built better than what Elon Musk is doing?
Well, really appreciate the opportunity to be on today, so thanks so much. And before I dive into quality, I do want to thank the entire General Motors team, all of our stakeholders and partners for really working hard to deliver such a strong first quarter. We continue the momentum on our EV and AV journey, and quality is one important story for that because we have a very demonstrated quality system with our global manufacturing system. And I was just at the Spring Hill plant last week looking at the Cadillac Lyriq, and the vehicle is just building perfectly.
What people want to know, Ms. Barr, I don't mean to interrupt, but what people want to know is, do you have demonstrable evidence yet that people will move away from Tesla towards other electric vehicles because of manufacturing integrity? Have you seen that in the research?
Well, we do know from the customers that buy our Bolt EV and EUV, they're some of the most satisfied customers of any in industry. I can also tell you with our reservations for the Silverado EV, about 60% are new to GM, and about that are coming from East and West Coast, where we haven't sold as many vehicles. So I think those are early indicators that yes, we have great products right now, and the customers have responded, and the interest in whether it's the Hummer EV,
there you go.
Whether it's the Lyriq, they're coming, and they're very
Lisa's
interested.
got in an order on the Hummer EV. Lisa, pick it up.
Mary, I do not have an order in the Humvee, but perhaps if there was space in New York City, perhaps. I do wonder, when you talked about this on the call, that you expect to make 25 to 30% more vehicles this year than last year. How much does that rely on a reopening in China and a continuing momentum in the U.S. economy?
Well, definitely from a wholesale perspective, we see strength with the consumer, especially for GM products. We're, watching this very carefully with inflation and with interest rates. But again, when we deliver vehicles to plants, most of them are either sold or are sold very, very quickly. For instance, in trucks in the U.S., we have less than 12 days supply, which is extremely low when you look at the strength of our truck franchise. So we're seeing strong demand. We think there's a lot of pent-up demand from the consumer, but we're watching it very, very carefully. As it relates to China, we are seeing, what we think are green shoots with the government indicating cases are coming down, and so far it's been minimal impact, and we see if what's happening now continues, that we should be able to manage through from a supply chain perspective. So again, a lot of moving pieces, but we're very optimistic and looking forward to being able to wholesale 25 to 30% more vehicles this year.
Mary, have you shifted any of your supply chain dynamics out of China in response to the rolling lockdowns that we've seen over the past few years?
Well, if when you look at the supply chain, it's a very complex supply chain, and we are looking with the lessons learned from the semiconductor, from on balance as we look at what is the way to make sure we aren't constrained like we have been for the last, year and a half.
Mary, I want to go all Kettering on you, the new General Motors Institute. You go in there and you got all sorts of courses. You took them, electrical engineering, joules, kilowatt hours. Our David Welch in Detroit wants to know your battery trend in physics, in kilowatt hours versus what others, including Tesla, are doing. The heart of the matter is you got to build a better battery. I need an update.
Well, we think we're very competitive right now with the batteries that we have, and we actually think with the chemistry that we're launching now with Ultium, we're in a leadership position. It's 40% less expensive. The Silverado that we'll be launching will have 400 miles of range, and that's less than a year away. So we think we're in a leading position with our battery chemistry technology, and and we're not stopping. We have more work. We're working not only with LG but with Solid Energy Solutions and other partners. I've been in meetings, several meetings just in the last several weeks of talking to new battery makers, because we want to make sure that we have the best technology from an energy density, efficiency, cost perspective. And the beauty of our Ultium platform, that is the foundation for the Hummer and for the Lyriq and all of our vehicles going forward from an EV perspective, is that it's chemistry agnostic.
Yeah.
So as we see opportunity to use a new and validated chemistry, we can do that with minimal disruption.
Before we let you go, Mary, I do wonder whether you see an opening for General Motors to gain a competitive advantage while Tesla is dealing with some of the drama around Elon Musk's bid for Twitter. Is this actually an opportunity, or is it more complication around the EV space?
Well, when we look at it, we're focused on our plan of executing. General Motors has today we offer a full portfolio for all customers. When you look at what we're going to have from a Chevy perspective, from a GMC perspective,
but do you
Cadillac.
but Mary, sorry to cut you off, but do you have a response to the Twitter issue and sort of Elon Musk's bid there?
Actually, no. I mean, as a company, we're going to wait and see what are the dynamics that change as it relates. But right now, we're focused on our EV execution, and I don't think it really plays into it.
Mary, I'm running out of time very quickly here. What do you see on the wage dynamic at your acclaimed factories? What do you see in terms of wage inflation for the next 12 months?
We are seeing, first of all, we are very proud that we have, very competitive wages, and, from a GM perspective in our facilities, we built the middle class from an automotive perspective, and so we're very proud of that. As we bring new people in, we're evaluating what it's going to take to make sure that we get people into our factories. So it varies by country, but for the most part, it's not causing us an issue right now.
Mary, I got to come to Detroit, and I got to see the Detroit Tigers play. That's all there is to it. I got 8 more questions. Mary Barra, thank you so much. General Motors Chair, Chief Executive Officer there. Lisa, to me, what is so absolutely crucial here is she's trying to make a transition from auto, stodgy, staid, over to technology. Is she going to have to offer technology wages?
And that has been an issue across the board as everyone tries to compete with technology wages and everything else. We're looking right now. Interesting to see that they expect to produce 25 to 30% more vehicles, and that they're just flying off the shelves.
We're going to have more on Bill Wang through the morning on radio and television on Bloomberg. I do also want to know Euro breaks down to a wow statistic of 105.53. We'll follow that as well all day. Meta this afternoon. This is Bloomberg. Good morning.
soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Live from New York City this morning. Good morning, good morning. We are looking to bounce from an ugly Tuesday. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. Quarterly beats getting little reward.
Overall, look, earnings are not that bad.
Individual company earnings look quite solid.
We have about 80% of companies beating estimates.
But that's not helping the share prices right now.
We're seeing very different type of reaction depending on earnings.
Any slight earnings guidance weakness, they're sold, and they're sold hard.
Investors punished their miss pretty drastically.
People aren't asking questions. They're just saying adios.
The buy side was already, rather pessimistic coming into this earnings season.
We have now on deck all the mega cap tech names.
There is a need to rip off the Band-Aid and deal with some of these back half forecasts.
It's a pretty critical week.
You've got all the overhang of what's happening in China.
We've had a tremendous backup in yields.
It's not a great backdrop right now.
We may be having to live in sort of this macro-driven world right now.
With a ton of macro uncertainty, joining us is Crossmark's Bob Dole and Katie Kaminsky of Alpha Simplex. Katie, it has been a rough, tough ride for the Nasdaq for this market over the last month and, in fact, year to date as well. Your read on what's driving this?
For me, it's really a long-term versus short-term issue. Longer term, we're seeing the pressure of interest rates be the bigger problem. And yes, some earnings are good, but the truth is longer-term issues are not resolved. So any sort of sense of weakness is going to be jumped on. And I think yesterday, just how extreme the move was kind of showed that, and that people are nervous. They're nervous about what's going to happen if interest rates do hold. And we haven't even seen anything happen yet, really. So I think that's why we're seeing that weakness in the NASDAQ.
Bob Dole, you were nervous. You were bearish, much more bearish than I've ever heard you in the years that I've known you. You were bearish coming into this, and you are saying now that cyclical risks are increasing. They're not decreasing. Why is that, Bob?
Interest rates, that's the whole story. March 31st, 10-year Treasury was 232. Last Friday got to 292. I know we backed off some, but that 232 is up from 151 on December 31st and up from 50 basis points 2 years ago. The stock market cannot handle on a valuation basis this pace of interest rate increase. That's the major issue in my view.
Why can't the banks get it done with these kind of increases? I'm just going through the year-to-date moves in the likes of JP Morgan and elsewhere. And Bob Dole, they are ugly, ugly, ugly. JP's down 22% year-to-date. Citigroup's down 16.8%. Bank of America down 18 percentage point. Why has it been that bad for those names?
So I think where you are, I'm adding to them. I feel like I'm catching a falling knife, but it's all about recession fears. If interest rates go up, that's generally good news for banks, unless we're going to have a recession, and then you want to sell the bank. So I'm betting no recession until the second half of 2023.
I'm looking at a dollar that's ever stronger, up 0.6%. The DXY at a 5-year high. The dollar index just short of a 103 handle as I speak at 102.90. Katie, the strength in this one. Can you see anything else getting stronger against it in the near term?
Well, there's been some dispersion. I'd say the biggest driver of this is the euro. So take a look at the euro, and the euro is very weak today. It's hit some of its support levels, and we're seeing sort of that relative valuation difference across the board, where the U.S. is just looking a little stronger than other areas. I think this dispersion we've seen related to carry in terms of certain EM currencies also dissipated when recession fears drove the market prices down. So I'd say the dollar has just been the biggest winner and the biggest trend this week, although we've seen some reversion in other asset classes.
Euro dollar right now, 105 handle, 105.57. Equity futures positive, just about 0.4 on the S&P. What a week for earnings. A little bit later after the close, Facebook, tomorrow, Amazon and Apple. 80% of the S&P topping estimates so far. Many of them, Katie Lyons, getting very little reward.
Yeah, that's absolutely true, John. By and large, earnings season has actually shaped up to be really quite strong when you look at the number of companies that are beating on average, beating on profits by around 6%. And the vast majority of them are seeing growth on both the top and bottom line. But as you suggest, met with very little reward in this market. The average one-day move post-earnings for the companies reported thus far, down by about 0.5%. And when you look at the equity benchmarks as a whole so far this earnings season, since JP Morgan kicked things off 2 weeks ago today, they are down across the board. The Dow down about 3%, the S&P by 6%, the Russell 2000 around there as well. But for tech, it has been even more brutal. The NASDAQ 100 index yesterday falling to its lowest level in almost a year, since May of 2021. It is now down about 21% year to date. That decline really rivals what we saw back in the peak pandemic era fear back in March of 2020. That decline was around 25%. And of course, with mixed results from Microsoft and Alphabet after the bell yesterday, we'll see what kind of influence the rest of the tech companies reporting throughout this week will have on the market as a whole, John.
Kelly Lyons, looking forward to it. Thank you. This quote from Bank of America got my attention this morning. This is what it said. The Fed is likely to shift from a source of volatility to one of more stability over the coming months. A more certain Fed should help lower rates, Vol, and provide confidence to the market. Greater rate certainty should give investors more comfort to lean long duration. Now, Bob, would that bring you comfort on the equity side if we could get over that uncertainty around this Fed?
Sure would, John. If you could just tell me rates are going to just stay here for a while, I think the equity market can begin to pay attention to the good earnings. Our view is this year is a tug of war. The tailwinds, earnings, the headwinds, valuations, and valuations the whole story right now, and is directly related to the pace of interest rate increases.
Have you got a decent understanding of who wins out that tug of war this year, Bob?
Yeah, so we called for a down year in December, but not our target's 45.50, which is actually a nice gain from here, John. But if that's where we end up, the headwinds of valuation will win the race, and that's what's happened so far this year, obviously.
Katie, that's what's happened in this equity market. From a bond market perspective, it's pretty clear that over the next few months, on a year-over-year basis, we'll get this so-called mechanical peak in CPI in America. Should that bring people comfort, even if we have this prolonged period of above-target inflation at this Fed? And can we move past this Federal Reserve? Well, let's be clear. Over the next few meetings, I think we have a decent understanding of what this Fed will do. 50, 50, and maybe again 50. From there, that, Katie, is where the uncertainty is, isn't it?
That's correct. I think the challenge is we have a long way to go, and the current situation with higher inflation, whether or not it's peaked or not, is that inflation is challenging. It's insidious. It goes into different places and it causes issues across the board. Couple that with supply chain and scarcity issues in the commodity markets, we're sort of in a headwind of an environment where the Fed has every incentive to make this ride smooth. And so I think the goal would be that this is a smooth ride and that the equity markets can waiver it. I think we're a little concerned more that if that doesn't end up the case and we have a little bit more challenge, we might have a good probability of some sort of reversal or recession, hence the market's behavior yesterday. I mean, it's definitely a real risk.
Take some comfort from yesterday that it was the classic risk-off move, and then risk-on this morning. Equities up this morning. Yields up this morning. Yesterday, yields down, equities down. Bob Dole, the problem we've had more recently, though, over the last several months is that the backdrop has hit both stocks and hit bonds as well. Is that a dynamic, Bob, you think is here to stay?
I don't think so, John. Back to your comment, if the Fed stabilizes things or is able to stabilize things. Look, come back to the inflation story. Inflation was 2, it's now 8. My guess it ends the year around 4, to use round numbers. And I think that decline in inflation, should we peak here in the second quarter, as many of us are expecting, that will give some pause to this bearish noise around valuation, and we could get some trades. I don't know that they're lasting, but I find myself trying to defend the bulls at 4,200 on the S&P.
Well, Bob, if we get down to 4 on inflation, where's nominal growth? Where's real growth? Where do you see GDP landing year end?
I think we will have a year that's 2.5 to 3. The problem is it still decelerating as we end this year going into next year, and do we have a recession? That's what the market is dealing with now, and of course we don't know those answers.
Is that a world you'd like to buy the NASDAQ in?
Not just yet. Not just yet. So NASDAQ and tech can be in the same sentence. I think there are 3 parts of tech. High PE tech that is long duration equities has gotten horribly punished. Not interesting to me. The mega cap stocks mixed, as you pointed out. I think it's the old value tech companies that are selling much cheaply. That's where you have to hang out in tech in this environment.
This move in this NASDAQ down 3.9% yesterday. We were looking at a bounce this morning. It was about 1%. Now we're negative. On the month, we're down 12%. On the year, on the NASDAQ 100, we are down 20 percentage points. Bob Dole, Kelly Kaminsky sticking with us. Going into the opening bell, let's get you some movers. Here's Taylor Riggs.
John, it was interesting. 24 hours ago, you were talking with Dan Ives over at Wedbush and really talking about how he was focused on Microsoft and the cloud. And indeed, of course, some of what he said there certainly rang true when we got those quarterly results. Cloud here, of course, within Microsoft, a huge sort of outperformer here for the company. Otherwise, though, maybe some spots of weakness, but the stock price certainly up about 4% this morning. GM also to the upside this morning, certainly looking at the company this morning after reaffirming that full year guidance. Is the chip shortage finally easing? Maybe investors trying to take some good news out of that. To the downside a little bit, John, I want to be careful here because overall Alphabet felt pretty good. But again, if you talk about sort of the high expectations for YouTube and some of the ad services there, maybe it's being hurt a little bit by some of the competition. And then, of course, some of the macroeconomic concerns coming out of Europe. Speaking of macroeconomic concerns, it's Boeing, a complicated company, but echoing similar comments of GE, Raytheon, highlighting sort of inflation, war, and maybe that's offsetting some of the good news, really worse than expected sort of free cash flow burn and worse than expected loss here on the bottom line.
There are enough excuses out there if you need them right now, that's for sure. Taylor, thank you. A close to $2 billion miss on revenue at Boeing. Not pretty. Coming up, the energy standoff between Russia and Europe.
Our guidance here is very clear. To pay in rubles, if this is not foreseen in the contract, to pay in rubles is a breach of our sanctions.
Unfortunately, right now, there is nothing clear about the energy situation in Europe. That conversation next.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
Our guidance here is very clear. To pay in rubles, if this is not foreseen in the contract, to pay in rubles is a breach of our sanctions. We have round about 97% of all contracts that explicitly stipulate payments in euros or dollars. Companies with such contracts should not accede to the Russian demands. This would be a breach of the sanctions, so a high risk for the companies.
Russia cutting off gas supplies to Poland and Bulgaria until payments are made in rubles. The German economy minister said this: the country's gas supply is, quote, we are doing everything to keep it that way. It is, quote, stable right now. We need to make sense of something I don't think we can make sense of. Maria Tadeo of Bloomberg joins us in Brussels and AMH down in DC. Maria, can you make sense of what is going on? Why Poland and Bulgaria have been cut off? The Russians are saying you only get gas if you pay in rubles, and Ursula von der Leyen is saying no one can pay in rubles.
It's very unclear, Jonathan. The only thing that's clear at this hour is that this is a major escalation between Russia and the European Union. And a lot of this is political. Of course, Poland has been incredibly hawkish on the Russian government, and then they had their gas cut off. The same happened with Bulgaria, which did not comply with that demand to pay in rubles. So we are seeing that Russia is making good on this threat. And by the way, we always knew that this was going to be the most delicate time in the saga, the end of April, beginning of May. Now, if you're a European company right now, it is very difficult, Jonathan, to navigate the space because the head of the commission is giving you a very clear guidance: do not pay in rubles. This is something that the Russians are doing to prop up their economy and their currency that would be in breach of our sanctions. But of course, at the same time, companies believe that there is a gray area in which they pay in euros and Gazprom will convert it into rubles for them. And of course, you have the big threat from the Russians now saying, if you don't pay, we will make good on this. You're not going to get your gas. We've seen it in Poland. We've seen it in Bulgaria. The one thing I would note, however, Jonathan, is that we're not really expecting any cutoffs from gas supplies from Russia for the time being, excuse me. If anything, it would be at the end of May. So for the time being, it does seem that the situation in Germany is stable, but I would remind everyone that Poland, just like Ukraine, is a transit country for Russian gas.
Maria, let's take a beat. Let's go through this together. Our reporting suggests that 4 European gas buyers made ruble payments to Russia. A person close to Gazprom said 10 buyers opened ruble accounts. Now, I'm trying to understand why Poland and Bulgaria got cut off. You've got Ursula von der Leyen saying that you can't make payments in rubles. We're reporting those payments have been made. Because surely, if the Russians are saying they need to be paid in rubles and you don't get your gas if you don't, then that makes sense for Poland and Bulgaria to be cut off. Why has no one else been cut off? Have they been paying in rubles?
Look, what we know is that 4 have decided they would be open for this. We know that Hungary said already on the record that they would pay in rubles, that they didn't see an issue with that. And then the question is, who are the other 3? We did get a comment from the Austrian chancellor saying it was not Austria. Remember, at one point it was suggested that the country could do that. So for the time being, this is a guessing game in terms of who are the other 3. Now, when it comes to the other 10 accounts, these are European companies. So it's not countries, it is companies. Now, if you ask me, why is this happening with Poland? Clearly, it is political. This is a government led by the Polish prime minister, who's incredibly hawkish on Russia, who was sending tanks, by the way, at the start of the week. And then when you go to Bulgaria, it's a small economy, it doesn't do a lot of damage, but it sends a very clear signal that other countries could come next.
Anne-Marie, if you had to explain to people in Washington what on earth was going on with the Europeans in this gas situation with Russia, what would you tell them?
I would tell them it's quite complicated, and this is something I imagine the administration was expecting. This is something everyone knew President Putin had the ability to do. And what he is really doing, and Javier Blas wrote an opinion piece about this a month ago that potentially we could see, is he is dumping the Europeans before they have the chance to dump him. This was almost inevitable, right? Putin has been saying for weeks that you have to pay in rubles or we are going to cut off supplies. Now, Maria's talking about a potential gray area. It does seem to be that some companies are using that gray area. And what Putin is really doing by forcing these companies to set up these banks, accounts at Gazprom banks, yes, you can pay in euros and US dollars. Gazprom Bank will take care of the FX trade and exchange, but that then protects Gazprom Bank from any sort of sanctions, because you cannot sanction the bank if you're reliant on them doing these transactions to make sure you get some supplies. What the U.S. is doing, Jonathan, is what we've known basically since March. President Biden said this alongside Ursula von der Leyen, that they're going to send 15 billion cubic meters this year of LNG. But that is really tiny compared to what Europe needs.
MH, thank you. Down in D.C., Maria Tadeo over in Brussels. Maria, happy birthday for yesterday. I forgot you weren't here, so I couldn't tell you.
Thank you so much.
My pleasure, our pleasure. Thank you very much. The situation in Europe continues, for many people, to be absolutely embarrassing. The situation for the ECB and President Lagarde getting increasingly difficult, stuck between a rock and a hard place. The rock, high inflation, the hard place, decelerating growth. Will we see a recession? Mark Haefele of UBS is optimistic. He says the following: the Russian gas export developments out of Europe are a reminder of the potential for escalation. However, Europe still has many diplomatic and fiscal policy responses available to prevent an energy-induced recession. Their base case, no European recession. Katie Kaminski, do you agree or disagree?
Well, I think we won't know the answer to that for a while. But what we do know is that this narrative of inflation is much more at play because the scarcity, the issues related to oil prices, the volatility we're seeing there is going to continue to plague investors and companies. I think right now we're in a standoff situation, which is never a good situation for supply chains. So I think that's where I view it, is that, yes, a recession could always be an issue, but right now it's still just very unclear. It's very volatile, and we'll have to wait and see.
Bob Dole, for much of this year, the only sure bet in this equity market was energy. Energy in the commodity market, energy equities. If we're going to see growth decelerate, are you expecting energy stocks to hold up too?
I think they will experience more profit taking like we've seen in recent days. They were up 40% at their peak. Take a little money off the table.
What about you, Katie? Where do you stand on that story?
So energy is still very bullish on our side, but energy was extremely extended until early March. And so what I would say is that we're still sort of seeing some influence of, technical signals saying that energy is still going to remain high, but we're definitely a little more tepid in terms of the fact that there's a lot more volatility related to demand issues. I mean, I know we were talking about what was going on in China recently more. That's not the narrative today, but now the narrative is Europe. So I'd say that we're kind of seeing a lot more of somewhat of a potential inflection point for this trade, but it's still consolidating.
Katie, awesome to catch up alongside Bob Dole to break down this situation, which right now is incredibly difficult to break down. Bob Dole and Katie Kaminski. Your euro is deeply negative, a 105 handle on euro dollar. Adam Ruskin had this to say: this is the euro's problem in a nutshell. He said, based on market pricing, even if the Fed stops tightening in June 22, just a few months away, the US is expected to have higher rates than the euro through the whole of 2023. And there is a difference between rate hikes in the near term and the prospect of rate hikes down the road. He said the value of a bird in the hand, rate hikes soon, rate hikes assured, has gone up, as the value of a bird in the bush, possible rate hikes far in the future, has gone down because of increased long-term uncertainties. What we do know in the near term is that we get Fed hikes. In the longer term, the ECB, I've got no idea what this ECB can deliver. And that's the problem for this euro, weaker for a fifth straight session with a 105 handle. Remember, 103 was the low of the last 10 years for euro dollar. That was late 2016, early 2017. As we've said repeatedly on this program, for the ECB at that time, that was a policy goal, an objective to get a weaker currency to do something about inflation that back then was too low. This time, that's not a policy goal. That is a problem. Coming up in the morning calls and later, Alphabet reporting a rare earnings miss with slowing ad sales starting to bite. The conversation still ahead with KeyBank's Justin Patterson. Looking forward to that with that stock down about 3.7%. And equity futures, this is not the pop you woke up to. Futures are only up 0.2% on the S&P 500. They were higher by about 1%. And the NASDAQ has been dipping in and out of negative territory through the last 20 minutes. From New York, this is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This equity market bounce does not stick. Right now, we're just about positive on the NASDAQ. We turn negative on the Russell, on the S&P 500, up about 0.25%. Into the bond market, the shape of things as follows on 2s, 10s and 30s. Yields were much higher than this a little bit earlier. Now up just 4 basis points on a 2-year, 251.81, and about 25 basis points below the highs of the year, which were only a week ago. That's the price action. Here are the morning calls. First up, JP Morgan downgrading JetBlue to underweight from overweight, citing low confidence in management's ability to get higher prices under control. That stock is down another 2.7%. Next up, Piper Sandler downgrading Capital One to neutral, 143 price target, expecting muted earnings growth for the next couple of years. And finally, Wolfe Research raising its Microsoft price target to 350 after earnings, highlighting the company's impressive guidance and solid demand. Coming up, the street rewarding Microsoft for its results, but a different story for Alphabet. That conversation up next with KeyBank's Justin Patterson. That stock is down 3.7%. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
24 seconds away from the opening bow this morning. Good morning to you. We were looking for a bounce earlier on. We don't have that bounce right now. On the Nasdaq, we are just about positive by 0.05%. On a Russell, we're negative. On the S&P, up 0.25%. And yesterday was absolutely brutal. That's the opening bow. Switch at the board and get to the bond market. Yield just a little bit higher at the front end and through the curve, up 3 basis points. But even that move fades. 275.51. Euro dollar now down 0.9%. This is a 5th straight day of euro weakness. Euro dollar 105.41. Crude just about holding on to a 100 handle, 125. We are negative 1.4% and down about $1.50 so far. About 20 seconds into the session, let's break this one down for you. Information technology does bounce back a little bit, up 8 or 0.9%. The S&P, though, up a little more than 0.1. Let's call it 0.2% higher. With more, here's Katie Lyons.
Well, the lead in the technology sector today is Microsoft. That was the good news story from the tech reports we got after the bell yesterday. Beats on the top and bottom line. Thank you very much to the cloud. That was really the driving force behind 18% growth on revenue. The 19th straight quarter of double-digit sales growth for that company. But sales picture not so great for Alphabet. They're facing a lot of headwinds on the advertising front, including softness in the European market, weakness in YouTube with TikTok taking a bite out of that business, and also the Apple privacy rule changes that have dogged other advertising reliant companies like Meta's Facebook. It'll be interesting to see how that one shakes out after the bell today. Elsewhere, Texas Instruments also reported yesterday the chip maker had to cut its forecast due to China's COVID-0 policy, that creating some supply constraints for that company. And finally, just to check on Twitter as well, it will be reporting tomorrow, but no conference call, John, because Elon Musk is coming in to buy the company. What's interesting, $54.20 is the deal price, $49.08 is where we trade at the opening bell. So clearly investors still a little hesitant around some of the risk, including where is he going to get the financing and what do regulators think about that one, John?
$5 of doubt in the equity market right now. Kelly Lyons, keeping an eye on that one. Thank you. So Alphabet and Microsoft behind us. Taylor Riggs, 3 big names still right in front of us.
John, it's a countdown to the horse race. As you said, some of the big ones down, still 2 big days to go. We'll start with today, of course, Meta, Qualcomm as well. Certainly one that we're going to be watching when you think about the chip shortage and where we are with peak shortage behind us. And then, of course, a good read on the consumer. If you think about Apple and Amazon, further chips here, of course, with Intel. Kaylee sort of correctly said, no one really cares now about Twitter, given that that story is old when you think about the quarterly results. When you think big picture of what to watch for, some decent numbers here, of course, expected on the top line. Bottom line maybe looks a little bit squishy, but I want to do a huge caveat here. Anurag Rana writing in, Apple is going to generate north of $90 billion in free cash flow this year. Amazon, from the cloud business alone, going to generate north of $20 billion in operating profit. So I want to be really careful when we think about sort of declines here on the bottom line on a year-over-year basis, when you just think about massive free cash flow these companies are generating. What it means is sort of big picture. You take a look at the NASDAQ 100 and the forward PE ratios here, and actually now relative to the S&P 500, some arguably might say it's starting to look cheap given the big declines here. You can see some big declines going back to about 2020 when you think of sort of valuations on a PE basis.
Taylor Riggs, thank you. What a tough month it's been for the NASDAQ 100. Tough year so far as well, down by more than 20% or so, down about 20% right now. Google, Alphabet down by 4 percentage points. KeyBank's Justin Patterson saying this, he adjusts his outlook. We're now lowering our earnings estimates to reflect elevated costs and ongoing investments. Justin Patterson joins us right now for more. Justin, your time is super valuable this time of the year, so thank you for giving it to us. Let's start there with the likes of Alphabet. You were a little bit cautious going into this anyway. Was what you expected in this number when it was released, these earnings, in the last 24 hours?
Yeah, I'd say it was largely consistent with expectations. Search a bit better than we forecasted, reflecting the durability of direct response advertising, product innovation, whereas YouTube was a big negative variance for our model. That was a function of a softer brand advertising environment, pullbacks from Europe, a difficult comp, both from a year-over-year perspective and the Apple platform changes. Now there's this open-ended debate of whether TikTok is having an impact. So if I roll those factors together, throw in the FX weakness, where the euro is at currently, that's what gets to a revenue forecast that doesn't change that much, and earnings growth largely the same.
Justin, Ruth Porat has arguably transformed this company when it comes to buybacks. Ruth Porat delivered another one yesterday. Is that not making a difference here? Can you help me understand just capital returns and what it means for the stock?
Yeah, so there's two pieces in there. So if I look at just overall operating income growth, that was very healthy this past quarter, roughly 20%. Where you saw more of the variation was actually below the line at the interest and financial income level, where you just have various investments that are getting the negative mark, and thus you have EPS growth look a little more muted. The buyback helps insulate that over the course of the year. If you look at Google, it's nearly given all of free cash flow generation back to the buyback. So that's why I'm not too concerned about the stock here. There's just a very strong balance sheet, still very healthy free cash generation. As we work through some tough comps on 2022, a little more macro uncertainty, you start to get back to a more normal earnings growth profile next year.
Justin, I've got a few other names to whip through with you. Just something that jumped out for me on the Bloomberg, just to see 54 analysts on Alphabet with 54 buys and 0 holds and 0 sells. Does that make you uncomfortable at all, just how big the consensus is around this single name at the moment?
Yeah, so I would say Google has been the most consensus long within the group so far. That just reflects the durability of the business, whereas you saw Meta, whereas you saw Snap face some incremental pressure from the platform changes by Apple. You really just haven't had as much of a headwind within Google's business. So more diversified, less platform pressure, creates more durability toward the long-term free cash growth. In a market like this, where any softness does get sold, that could create a little bit of portfolio turnover here, but relative to others, I think you have the least negative revision cycle risk on Alphabet.
Well, it's been sold hard. It's down 17% month to date, so it's been pretty brutal. Any read across here for Meta later, Justin, for you? If we learned anything from Alphabet, what it could mean for them?
Yeah, I'd say combining these results plus Snap from last week, brand advertising a bit softer, so that's plus Europe. So that's one cautionary flag. And then as mentioned at the top of the hour, just the euro remains a headwind, I think roughly 105 this morning. So that's one more factor that's going to weigh on reported revenue growth, making FX neutral growth the key variable to watch.
You're perfectly positioned to help us answer the next question. The situation with Twitter, Justin, what are we learning about that situation? And does less censorship mean more difficulty with advertisers? And is that to the benefit of, say, Meta and Facebook?
Yeah, there's a couple of interesting questions in there. One, just Twitter has 85% brand revenue exposure, and consensus is around 25% ad growth for this quarter. If the better quality assets are growing roughly around 25% right now, fair to assume that Twitter is more exposed to the negative revisions going forward, which kind of reinforces why management felt the need to sell. On just, does this change the competitive landscape? TBD. Twitter is really a news platform more than anything else, so it has to go out, get the users engaged more first. It sounds like Elon Musk has some plans for that, and if it can do that in a brand safe manner, then perhaps the advertisers stick around. Right now, a lot more uncertainty, still a lot more content moderation that needs to be done. So I'd be cautious about just near-term pullbacks on spend on Twitter.
Justin, what did you think about the fact that we get the earnings this week, but we don't get the earnings call? Any reaction to that from you? Does that tell you something about what we might get, or am I just being a little bit too cynical?
A little more of the latter there. It's pretty standard practice that when a deal is taking place, companies do pull the conference call, so I wouldn't read too much into that. I will be curious to see if Twitter goes through its typical shareholder letter process or just keeps it as an investor brief.
What do I read into a 48 handle on the stock in early trading this morning? What does that tell you, that spread? 48 now, the offer price, the agreed price, 54.20.
It's very atypical to see that degree of spread for an all-cash offer, so there's certainly doubts, whether that's just regulation or a view that perhaps Elon may be overpaying here and rethinking the bid. Probably more regulation concerns, but we'll see what transpires over the next few weeks.
Justin, super busy, I know. You've got a few more companies to cover through this earnings season. Justin Patterson there at KeyBank. Justin, thank you. Twitter down 1.8%, 48.80 in early trading. Coming up, a big week for US data.
It's going to come down to Friday's data. The employment cost index is going to be a very important data point for the Fed in terms of determining how much wage pressures are still in the system.
The employment cost index this Friday, whether you'd call that a big week or not, I don't know. Michael Purvis might of Tallback, he joins us next.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modelizaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
It's going to come down to Friday's data. The employment cost index is going to be a very important data point for the Fed in terms of determining how much wage pressures are still in the system. The ECI is the one that the Fed really hangs its hat on.
That's the data coming up this Friday. How do you take a portfolio from $1.5 billion to $35 billion? The Archegos founder, Bill Huang, and CFO, Patrick Halligan, charged with fraud over a multi-billion-dollar mirage. Prosecutors saying both Huang and Halligan, quote, repeatedly made materially false and misleading statements about the portfolio of securities to numerous leading global investment banks and brokerages. Following this for much of the last year, Bloomberg's Sonali Basak. Morning, Sonali.
Good morning, John. We have a situation in which Bill Huang and his former CFO of Archegos were arrested this morning, and they're expected to appear in Manhattan court later today. We expect a press conference a little later this morning as well from the Southern District of New York. And we have a situation in which a lot of detail in an almost 60-page unsealed indictment is revealed about just how big Archegos got, his communications here with his own employees and other banks, and also the sheer size of the positions he took. Think about it. How much he owned of Viacom, GSX, and Discovery. These are huge stocks that are traded every day in normal markets. So we do know the losses, of course, that the banks had gone through, but now we are also seeing the extent to which Archegos had gone. And remember, they are being accused of market manipulation and fraud. Racketeering appears as well in this indictment.
Now, the allegations. Have we got an idea, Sonali, of the defense and how embarrassing this might be for some of the names of those banks on that board?
This is a great question here because we want to see what Bill Huang will say next. Will he countersue in any fashion? Will the banks seek to reclaim any of their losses? Of course, there's kind of a tall order here in which the banks would try to reclaim some of those. We know there are other things going on in the background as well. The DOJ, the SEC, and other regulators keeping an eye on how this happened with the banks. Are there more regulations that need to be in place? And was there anything untoward that happened within the banks themselves? Remember, he amassed these positions on margin. He amassed them through swaps as well. So should there have been more clarity here? And also, should there have been more communications with regulators earlier on, John? That is still the looming question.
There are some allegations here, Sonali, that some people might look at and read and say, well, I thought that was just normal practice. You get to 5%, you find other ways of building up a stake so you don't have to disclose it. Do you think there's going to be some nervous fund managers around as well, Sonali?
Fund managers, yes, because there are some funds that were named here, but they were not named exactly. There said there are funds in the background here. Remember, it's not just Archegos. There's a block trading investigation also going on in the background here, in which both fund managers and prime brokerages are keeping an eye. And you know, some of these stocks named, like Viacom, they involved huge block trades. One more thing, it's not just the fund managers being nervous here. Companies being frustrated with what happened here. If you're Viacom, if you're Discovery, and somebody amassed this much of your stock, where were the banks in letting you know what was going on? We did speak to some of the companies in which Archegos was an investor, and they did not get a lot of clarity at that time. So a lot of questions on how investors are able to amass positions this large.
Fascinating story, just absolutely fascinating, and really looking forward to your coverage. That's going to take place, I imagine, not through the next few weeks, but perhaps through the next few years as well. Sonali Basak, thank you. Our Wall Street correspondent on that story. Joining us now on this market, it has been tough over the last month, that's for sure. Tallbacken's Michael Purvis joins us now. With the S&P bouncing back by 1%, the Nasdaq up by 1.46. Michael, you're keen to make the point to compare the S&P equal weight with the S&P 500 market cap weight. What does that tell you?
Well, the S&P equal weight is sort of a cyclical / value proxy in a way, right? Because it takes the big tech stocks down to the same positions as some, much smaller companies that are much more economically sensitive and don't have the structural growth or the fantastic digital business models that some of these big tech companies have the benefit of there. So it's really just a very simple way of saying value and growth. But what I think is interesting is that if you measure the equity risk premium for the various indices, the NDX, the SPX, or the SPX equal weight, there's a very large dispersion of where those equity risk premium are there. And so I think, we always sort of focus on the S&P 500. That's where the conversation starts and stops. But in terms of this relative valuation to treasuries discussion, which is really what the equity risk premium encapsulates, those metrics are really very different compared to the historic norm. So the equal weight index has been a much easier buy than, say, certainly the NASDAQ.
So, Michael, some people will wonder not whether it's time to buy the NASDAQ. That's the obvious question. Whether it's time to buy the cyclicals, the banks. The energies have done great. Let's talk about the banks because they've done really poorly. I've gone through the year-to-date figures on JP Morgan. We're down 22% on JP. On Citi, we're down 16. On Bank of America, we're down 17. It's been really, really difficult, even with the Fed story, which most people would have argued coming into this year would be supportive of these names, Michael. That trade has not worked. Is there any reason to believe it will work at some point this year?
John, you look at Bank of America's valuation relative to the markets. It's at a pretty cheap level here. I don't understand the severity of the down move in banks. I've been buying the dip in large cap financials. The higher rate story should be very constructive. It seems to be that the recession is an inevitable narrative, and that's just coming around the corner somehow. But I still struggle with that. I'm not, I'm really not on that. Recession is an obvious base case in 2023, and so therefore I'm much more comfortable holding the banks. If we do get a recession, if that assumption ends up being wrong, I would expect it to be relatively minor and brief there. So I think, if you look, yes, there's some correlation with the 210 curves and so forth of the performance of big bank shares. There's some historical history, trading history there. But again, I think Jamie Dimon will tell you this, that higher rates across the curve are much more constructive there. I think if you just open a simple bank account and we look at the interest rate you get paid on that and turning around and buying 2-year treasuries with that, it's a nice little arbitrage for those banks to lock up.
I look forward to seeing how much my interest goes on my deposits over the next couple of months as the Fed moves 100 basis points. I imagine it won't be anywhere near that amount. Michael, just looking forward from here, you said that's not my obvious base case for 2023. Do you think an obvious base case actually exists for next year?
Well, that's a great question. I mean, I think this cycle, I think one thing about this cycle is that there's massive distortions within the cycle. And, I would argue that, the rates market have kind of jumped to late cycle, really a late cycle condition, even early in 2021. Equities, I'm arguing, are really kind of more mid-cycle there. And so you have these sort of odd sort of displacements right now. If you look at the projected earnings growth, not my earnings growth estimates, but bottoms-up consensus estimates compiled by Bloomberg, they are, of course, not growing the way they were in 2021, but they're not, the earnings trajectory is really not looking at all like a recession is sneaking around the corner. And the resilience of the earnings stream is really, really pretty remarkable here. So I keep coming back to, the equity gyrations we've seen year to date. Well, it's coming after an incredibly strong 2021 where you had a fantastic nearly 30% rally in the S&P 500 on top of a very strong 2020. Right, and walking into a massive Fed pivot with a massive supply shock thanks to Ukraine, sort of exacerbating everything else. Year to date, the market's down 12%, John. That's really not that severe. I think it's really a testament. I mean, people could say, yeah, okay, equities are being dumb. I'm sort of saying, well, maybe they're not so dumb. Maybe equities are that sort of a tell that there's a lot of inherent resilience when you're looking at nominal GDP. This year that's could be, well north of 8%, very strong earnings for the larger companies that can manage their cost structures. There with the back end of the treasury curve that has been, of course, selling off aggressively. But if there's some stability that's found there in the next few months, I think you're going to start seeing a much more constructive path forwards for equities. But no question, the near term cross-asset volatilities are extremely high. The uncertainty factors will be high, and it's kind of a trader's market. I've been playing this market long and short, over the last 3 months.
Michael Purvis at Tallback. And Michael, great to catch up, buddy. As always, I think most people would agree with Michael that we need rates vol to settle down. Some stability there would be super helpful for the overall market. This morning, we advanced on the S&P by a little more than 1%. Information technology bouncing back by 2.76%. A lot of earnings coming up. After the close, we'll hear from Meta. Tomorrow, Amazon and Apple. Your trading diaries next.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Yesterday was absolutely brutal going into the close. 25 minutes out of the open this morning, and good morning, we are positive. There's a bounce. Will it stick? The S&P up more than 1%, the Nasdaq 100 up by 1.35 percentage points. That's the price action. Here's the trading diary. The U.S. Attorney's Office holding a press conference on the Archegos charges. That's at 11:30 Eastern Time, and it's back to big tech earnings with Meta reporting results after the closing bell. Apple, Amazon, Twitter, all coming up tomorrow. Plus, a Bank of Japan rate decision, another round of initial jobless claims and first quarter U.S. GDP, and finally, rounding out the week with a read on wages and consumption this coming Friday. From New York, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari sourced every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the number fever campaign. Del Fierro thought Pepsi's number fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complications due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack at the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environments, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it and I just watch it until it stops going up and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have